The first thing what you need to understand is, so for this paper, it's about quality. So when I say quality, it's not about practicing too many questions. Better if you had practice, but this is the last. So now how to practice the questions? That is important, right? What sort of, how am I going to practice questions? So when it comes to practicing questions, so you know our exam area, right? You got A, B, and C, isn't it? You got how many stages? A, B, and C. So in section A, you will be mostly getting about MCQs. Section B, that's also MCQs, but based on a task. Section C, typically they will be you will have 3 areas. So in that, income tax and companies tax will be a part and another question. Okay. So how to practice? What sort of questions I need to practice? What are the things I need to keep in my mind? Try to get your fact sheet usage as much as possible. Did you all go through the pre-mock sent by ACCA? How many of you all looked the pre-mock? You watched the pre-mock thing? Did you attend the pre-mock thing? The pre-mock 25 March, yeah, 25 March pre-mock paper. Good paper, but don't rely on those questions 100%. Those are not the questions that will be there for your exams. But good questions were there. I saw some good hints were there, and there you will be finding the debrief of them. So one of the examiner has explained how the question was tested. So better look into that. It will recap your knowledge. So the first thing I want you to go through this pre-mock. Okay, go through it tonight. So when I say pre-mock, you can try it yourself, as well as please watch those answering part. You got it? Please watch those answering part. It is important. Why do I say to watch your answering part? Because certain hints which they have already passed inside the questions, they are realizing those hints. So make sure you are going to watch those hints. It's important. It gives you a good grip of your understanding, and it confirms about your understanding. I mean, if you have watched, those who have watched would have understood there was a question on child benefit, isn't it? So normally the child benefit questions are very straightforward. So in that question, it was bit not hard ones, but it was bit kind of a twist that you need to understand, and what sort of things that you would have seen. So I hope you would have gone through that. So make sure those who have not gone through, please go through that. It's important. Then now you got areas like income tax. So income tax is the biggest area, isn't it? So an income tax, you got your rental property items, how chargeable gain taxes, then income tax administration parts. You need to go through all those things through some income tax questions. Then make sure you are practicing a CTR, a company tax return. So when it comes to a company tax return, few questions on those, each and every topic. Not only one type of the topic. Now, if you go to your Kaplan kit, you will have, they have separated like loss reliefs, like we did questions last week, right? So they would have segregated. So touch your knowledge on all those questions. So you might have not completed the entire exam kit, but no worries. Read, try to understand, first write your answers and see whether you are understanding. First, you need to read for yourself. Read it for yourself, and then see whether you are in a position to derive the answers. You can't match 100% in the exam kit. So don't put yourself in a spot of bother that you're not getting the exact answer. But try to match the answer. Try to be closer to the answer. That would be more than enough. Then you have an area called VAT. Go through that. This is important. And you have an area called IHT. Okay. So when it comes to CGT, CGT will be applicable for both individuals and companies. Companies CGT rules are different, individual CGT rules are different. Then the loss claims. So individual loss claims are different, then companies loss claims are different. Then try to understand why reliefs are given. Okay, there was a student who asked me this question. It's a good question. I'll ask with you as well. For a second-hand vehicle, okay, it can be a van or a car, whatever. Is it possible to give FYA? Can we give first year allowance? Can we give annual allowance? Or do we have WDA? What sort of allowance we can give? I need answers from everyone, please. Online guys, Danush and Asmad, FX. Who is this FX team? I don't know who is this FX team. Nafis, Pawan, Shenuri. You can give AIA, but WDA. Now see, this knowledge is lacking there. You are not good in this area. You're not good in this area. So that part of your knowledge is lacking. So what you need to do, you need to recap. FYA, can you give? No. AIA will be the allowance that they will be receiving. Fine. So you need to understand the methods, how it is applying to that. So based on that, do your questions. Now, more you study, you might feel at a point of time, okay, I'm not complete. Trust me, for tax paper, no one can be complete. No one can be complete. Very rarely we can score 100. Okay. So it doesn't mean that it is an excuse I'm giving to you. What I'm trying to say is try to know the maximum possible. That's the reason why we have a very big fact sheet. Okay. So yesterday to the group, I sent you the fact sheet also. So those are the, the expert revision group. Did I send it? Did I send the fact sheet? Okay. That's something bad. I hope I did. Okay, if I have not, I'll send it again. So those are the allowances and rate for your exam paper. Just in case for June, these things are changing a bit, okay? I mean, not massively, but the method in the sense, the provisions are changing. So let me send it to your expert tax group, the fact sheet. Okay, fine. So how many of you all tried the mock paper? Raise your hands. Roshani tried. Danush, did you try? Asmad, did you try the mock paper? Pawan, Nafis, Nushra. Yeah, did you all try? You all didn't try the mock paper? Why am I not getting answers? Okay. So can you all check whether I have sent the fact sheet to you all? In the exam screen, you will receive the fact sheet, okay? You'll receive the fact sheet. Yeah. Fully, it will be a track now. So that's why we are not going to WTA. Good. Now, yeah, balance you can take it. So now in this mock exam, we'll be touching most of the questions from the most areas. That's why I gave you. Now this mock paper touches more often than not most of the areas. Okay. Technically, this is mostly related to your past paper question 2023. A bit of an edit there. Okay. Right. What is this? So can we take the fact sheet as a print? No, you can't take the fact sheet as a print to the exam. You can't take. It will be available in the screen. You have to go back and take. You can't take. You have your docket, right? Go through the docket. Behind, they would have mentioned what you can bring to the exam hall and what you can't bring to the exam. Everything will be clearly stated, right? Where is this paper? So this is our paper structure. So in this paper structure, we are going to see 15 questions in section A and 15 questions in section B and 3 questions in sections C. All the questions are compulsory. All the questions are compulsory. Apart from these 3 hours, you will be getting another 15 minutes. Fine. So I know you would have attended this. Let's go through the section A questions today, and then we'll browse through each and every questions from the other part as well. So in the section A, Simon has been a sole trader since 2012. Simon has been a sole trader since 2012, preparing accounts to 31st March each year. In the year ended to 31st March 2023, his trading profits is 60,000, and in the year 31st March 2024, he had a trading profits of 66,000. What is the amount of class 4 national insurance contributions that Simon will have to pay for the tax year 23-24? Right. So always when you read your tax questions, just talk to the question first whether you are reading that taxation is related to an individual or a company. It's important. In this case, is it an individual or a company? Individual. How did I determine that? I'm talking to Simon. So what they are trying to say, Simon is working as a sole trader and he is making some profits, and they are asking us to calculate class 4 NIC. What is class 4 NIC? What is class 4 NIC? What is class 4 NIC? Okay. Make a note. Make a note. Class 4 NICs are based on. Class 4 NICs are based on. Class 4 NICs are based on the trading profits class 4 NICs are based on the trading profits. Okay. So which is related to in this question as well. That's why they are asking for class 4 NIC. So when you have class 4 NIC, what you should do next? What is the next step that you need to do? How to calculate the class 4 NIC? You need to go to the fact sheet. So let me also open the fact sheet. Give me a moment. So how many of you all did this question? You tried this question? What's the answer you got? Any answer you got? No, it can be right or wrong. It's okay, all good. We'll see. 3,000? 3,708. 03. Dhanush got 3,703. Okay, then I don't want to go to the fact sheet. No, you have tried the question. So tell me, what is the threshold or what is the limit? So you had 66,000 pounds that you're making as trading profits. On this, what is the amount that is not you're supposed to take? 50,000, 270. So that is the limit, 50,270 into the percentage. What is the percentage? You need to take 2%. You take 2%. So 2% of that is what? What is 2% of that? Let me also send the fact sheet so then I can show up the fact sheet. So this is talking about income tax, personal allowance, residential status, car benefit, full benefit, individual savings, pension schemes, capital allowances, corporation tax, then the profits, companies, penalties, inheritance tax, capital gain tax, national insurance contribution. So we are talking about class 4. So if your class 4 contributions, if you're making class 4 contributions from £1 to 12,570, that will be charged at nil rate. So from 12,570 to 50,270, you need to pay at 9%. 50,271 and above per year, you need to pay at 2%. The contributions. Okay, that needs to be your contributions. Now this is where you need to find. Now see, is your fact sheet is being useful? Your fact sheet is being useful. You don't want to memorize these things and waste your time. Right, going back to the question now. Or did I delete it? Right. So now in this question, what is the amount of class 4 national insurance contributions that Simon needs to pay? So Simon needs to pay. So he's making a profit of 66,000. So up until 50,000, sorry, 15,000, right? 50,000 to 70. The difference of this needs to be charged at 2%. Then From 50,270 minus 12,570, you need to contribute how much? 9%. So what is this? 315. And this, what is that? Now these are the contributions. How much on this profit I need to contribute? What is the 2%? What is the 9%? That is what you need to calculate. So what's the 9%? Someone help me, please. 3,393. So which means this will be 807. 3,708. Got an addition in correction. No, because from 12,570 to 5,270, the rate is 9%. That's what you need to contribute. Anything beyond, that's the reason why I took from 550,270 to 66,000. The difference will be taken at 2%. You need to contribute only 2% on those. But up to 50,270, from 12,570, you need to contribute 9%. Clear? Take 570. Okay. Then the next one. So which two of the following statements about tax appeals are correct? They're asking for the correct tax appeal statements. The first tier tribunal deals with straightforward cases such as imposition of fixed filing penalties. Is that correct? The first tier tribunal is technically dealing with straightforward cases. They are dealing with what? Straightforward cases. So that is a correct statement. Then the CPS, the Crown Prosecution Service, conducts tax appeal against taxpayers. Do they conduct tax appeals against the taxpayers? No. CPS is working to find out other prosecution services, not to the tax appeals against the taxpayers. Then the taxpayer must apply for an internal review by HMRC before making appeal to the tax tribunal. Do you have to have an interview? Is it a must to apply for an interview? No, it is not must to apply for an interview before you are making any appeal to the tax tribunal. Then the upper tribunals hears appeals against the decisions of the first tier tribunal is what they used to do. So these are a bit of what? So in this case, in this essence, your answers will be the first one and the fourth one. That needs to be the correct statements. This is a bit of documentation part, I would say, and in terms of these areas, you need to determine your administration, tax administration part. So what they used to do. So technically the CPS is working with the House of Lords. You know House of Lords? You don't know who is House of Lords? House of Commons in UK Parliament? You didn't do tax law paper? No, right? So CPS is mostly dealing with the criminal activities. So there is a specialized party who is going to, a group of people. A party is a group of individuals who will be reporting on those criminal aspects to the Crown. Fine. Next is an interesting question. What is your answer on this? What did you get as the answer? This is an easy question, I would say. It's a straightforward question. It's not a difficult question. What was your answer? Second one. Any other choices, guys? Did you all try online, guys? So in this question, Kate sold a flat in November 2023, realizing a gain of 25,500. So already we are making a gain of how much? 25,500. The flat had always been rented. out to tenants and was only chargeable asset that the Kate owned. Kate had taxable income of 31,500. Let's see why they are giving that 31,500. In tax year 23-24, she made a gross gift aid donation of £800 in December 2023. So what is the Kate's capital gain tax liability for the tax year 23-24? Right. So what they are asking us, they are asking the capital gain tax liability. They are asking us what? CGT. So what is CGT? When you are selling an asset, when you're disposing an asset, if you are making a gain, on that gain you need to pay taxes. That is CGT, isn't it? You sell an asset, so you observe in your question, are you selling something? So as a result of that, are you making something? Or are you using an asset? Out of that usage, are you making any gains? So having a capital item, if you are making any money, any income, then that income will be subjected to capital gain taxes. That income will be subjected to what? Capital gain taxes. So on this capital gain taxes, they are telling us already they have calculated the gain. Normally, how to calculate the gain? Sales proceeds minus what? The cost. Sales proceeds minus the cost. But here they have directly given us you are making a gain of 25,500. So which means I'm making a gain of 25,500. Correct? So then what is the next thing that you need to understand? This is a property. This is subjected to capital gain tax. All the capital gain tax or the capital gain assets will be given an annual exempt amount or an allowance. What is the annual exempt allowance for 23-24? It is 6,000. So you will receive this 6,000 on this capital gain taxes. So how much is that? This will be 500 and this will be 19,500. This is the amount that needs to be taxed. So this is the amount that needs to be taxed for the taxable. Right. So in this case, are you supposed to adjust for donations? Irrelevant. You don't want to supposed to adjust for donations. That is irrelevant information. But why they have given the taxable income as 31,500? Why they have given the taxable income as 31,500? Do you know the reason? But this 800 will be useful in a while, but I'll tell you. But that is irrelevant to get any other answers to calculate 19,500. It is not necessary. So up to this point, did you understand? How did I arrive at 19,500? Now, this is not the answer examiner is looking for. He is asking you what is the tax that needs to be charged. So how much is the tax that needs to be charged? So we understand that his taxable income is 31,500. So up to that 31,500, he will be utilizing that 20%. What is the 20%? 20% of tax rates. But this, now why that 20% I'm taking up until 31,500, he will be falling into the category of basic rate taxpayer. He will be falling into the category of what? Basic rate taxpayer. So the basic, generally, if you want to be a basic rate taxpayer, it is 37,700 is our limit to be to be a basic rate taxpayer. On top of this, you are giving a gift. So when you are giving a gift, this band will increase. So this band will increase by 800. You got it? But they are telling that your income is 31,500. So my income is 31,500. So which means when you adjust for this, the remaining part will be starting from the gains that you have received of 19,500. So why am I calculating this part? This part I'm calculating to determine, am I still falling into the basic rate tax part or not? Do I have an available balance that needs to be taxed under the basic rate? Did you understand that? Okay. So do you get a figure for that? How much is that? Can you simplify and tell me? 7,000. So this 7,000 needs to be taxed from what point of view? Not from income tax point of view, but this needs to be taxed at capital gain tax point of view, CGT. Okay, I'll come back. So from this 19,500, 7,000 will be taxed at basic rate. The remaining will be taxed at the higher rate. So what is that figure? 7 means 12,500. 12,500. 19,500 minus 7 will be 12,500. So now what are the rates that I need to get? What are the rates that I need to get here? What are the rates I need to get? What tax you are calculating? Capital gain taxes. Is it a property? What type of a property is this? This is a residential property. This is a residential property. So residential property, when it comes to capital gain taxes, we have separate rates. Normally it is 10 and 20, but in this case, this will be 18% and 28%. 18% and 28%. Did you understand that? Right. What is 7,000's 18%? 1,260 and 12,500 is 28%. 3,000 something. 30 means, yeah, 3,000. 3,005. So which means 4,760. You got an answer for that? Your option will be option 4. So if you have received you got 6,440, no? Then you have not taken the AEA. You didn't get the difference, the slices. 18%. Okay. Right. No matter what. But now did you understand the approach? So you got 6,440, no? And obviously you would have missed the AEA. So you got the AEA, you give the AEA, then fine. Then you didn't take the basic rate part. But the rates are different. So 1,260 is fine. Then 28% into 19,500 you do. Yeah, that would be the thing. Fine. If this is a commercial property, yes. Okay, because you're selling this flat. It's a flat, right? So flat comes under that definition. Okay, fine. Did you understand that? Now, for me, important part is this. Why they have given me the gift aid donation? That's a question. And why they have given the taxable income. So why have given the taxable income to decide, is there any income still qualifies under basic rate? That is the first thing. Then the second thing, Asmad, I'll come to your point. The second thing, you need to determine what is the rest of the balances will be taken up at what rate. That is important. And the third factor, AEA is a silent amount. When I say silent amount, examiner will not tell you that you will get AEA here. So if you should know if it's a capital gain tax. So all the assets will be given an annual exempt allowance of 6,000. So that you need to consider it. Right. This is a residential property. This is a residential property in this instance. That's the reason why that 18 and 28 applies. For what 10% and 20% applies? The normal properties, all the other things. Only for residential property, the rates are different. Only for the residential property, the rates are different. Good question. Good question to recap things. But it is not a difficult question, I would say. Right. So everyone understood the class for NIC part? Yes, 378. You got it? Don't put 6 answers. You need to round it up. They will say in the exams. Okay. Unless they specifically mention. Right. This is another easy question, but not too hard. But let's see. This is also an administration question, isn't it? Melton PLC prepared accounts for 12-month period 31st July 2023. There will not be a compliance check into this accounting period. Complete the following sentence about the retention of records for Melton PLC by matching the date of retention and the maximum penalty into the relevant target area. So Melton PLC will be liable to a penalty of Melton PLC. Is it from an individual's perspective or is it from a company's perspective? Company's perspective. So you have to clearly first, any question it may be, first see, is it from income tax perspective? Is it an individual they're asking? Are they asking on an asset? Then you need to understand where it includes. Or are they asking on a company's point of view? And see whether if the person is giving any gifts before he dies or things like that, then it will fall into IST. If it is goods and services, it will be falling into VAT. So in this instance, Melton PLC will be liable a penalty up to, I'll directly give you the rate, around 3,000 and until if it does not retains its records until which period? 2029. So you need to take till 2029. So how many years from 2023 to 2029? How many years? How many years you need to take? You need to retain the assets. Give me a moment. So how long you need to retain? You need to retain 6 years. You need to retain 6 years. The records. You need to retain your records until 6 years. So for companies, if the penalty will be initially charged up to £3,000, and if you are not going to retain your records, it is also a disaster for you. But how long you need to retain? For 6 years. Okay, from the period ended. So from the period ended, it needs to be 6 years. Second one, it needs to be the first option and the fourth option. Okay. Right. Did you try the fifth one? Your favorite area. What's Nicola's additional income tax liability? What they're asking? Additional income tax liability in respect of her property business income. What business income? Property business income in the tax year 23-24. So what's your answer, Roshan? You just, okay, fine. Let's see the guess also. Last moment. What's the guess? What did you guess?
8,006.
First one. You? Fourth one. Any online guys who did this? Nushra, the third one.
So I got the net income total.
Mm-hmm.
So if I have to deduct interest payable, interest paid and managing agent.
Okay, let's see. So Nicola, let's do this question with me, bought a residential property on 6th of April 2023. She let it out immediately at an annual rent of £2,000 per month. At an annual rent of how much? 2,000 per month. So is it start of the tax year or somewhere middle? Start. So you need to understand it will be covering 12 months. If she has started somewhere in the middle, now sometimes you might buy the property, but you can let it after some day, some months. So then you should not consider the date that the property is bought. You need to take the date the property is let. So in this case, in the start, no issues there. So then Nicola bought the property using an interest only mortgage. So the interest paid in the tax year 23-24 is 9,500. So how much? 9,500. 2,400 she paid to the managing agent. For many years, Nicola's only income has been employment income of 60,000. So she is making, apart from her employment income, she is now letting a property as well. So she is making some additional money. But that's the reason why they are using the word additional here. Because some students can misunderstand. So what is this additional tax? Additional income tax. Okay, fine. So now, first I need to understand the property income that she is making and what is the taxable income. Without knowing the taxable income, can I tax it? I don't.
So they're asking for the tax liability.
Yeah, the tax liability on the additional income tax. On the additional part, not the whole part. So if you go to the whole part only, the problem comes. Okay, fine. So you are making a rental income of how much? So rental income 2,000 per month. This is starting, which means for 12 months, which will cover for my tax period. So that will be 24,000. Always remember, you can reduce your agent fees. It's an allowable, because the property agent, you need to, who is managing the property, you need to make him the fee. So that amount will be reduced. So you are paying 2,400. So how much you have in remaining as property business income? So from property business income, you are getting how much? 21,600. Correct? Okay, we'll go to. So first you need to determine what is the direct expense which is related to the rental property. Okay. So now on this will be generally taxed at what percentage? Additional rate, right? So it will be charged at 40%. However, what is 40% on this? What is 40% on this? 21,600, 40% is how much? 8,640. So this is where Devinka arrived. Oh, you arrived. Devinka, you told me first one. Okay, this is how you got 8,640. That's why I wanted to explain. Now you need to understand why they have given us this interest paid amount of 9,500. So read the second sentence again to yourself. Read the second sentence. What is happening with the second sentence? You are buying this property using an interest only mortgage. You got it. You need to pay interests. So the tax rule tells you from your mortgage interest, from your mortgage interest, you can reduce up to 20%. You can reduce your liability up to 20%. So that's how much? 9 into 5,900. Correct? So the remaining amount needs to be taxable. $6,740. You got an answer? Right. Did you understand why we are getting 6,740? Did you understand why we are getting 6,740? The reason why I didn't charge this, you need to understand you are getting this property by mortgaging. So that interest, you will be getting an allowance of 20%. So that 20% you don't want, will not be subjected for taxation purposes. Did you understand that? Good. Taxable income. This amount will be taxable. That is taxable. They are not asking us the tax rates. Okay. Additional income tax liability in respect to the business income. Okay. So that is the amount that you are supposed to pay. After what? Subjecting to this 40%. So those who got 4,840. So which means that 4,840 means you would have completely deducted the finance costs, isn't it? So you would have deducted the finance cost completely, the 9,500 into your answer without taking the 40%. So then only you would have arrived at the 4,840, isn't it? Otherwise, it can't be 4,840. You would have taken 24 minus 2,400 minus 9,500. And then on the balance sheet, you have taken 40%. But did you understand what is that 20%? That is the taxable allowance that you get on that interest. Right. Residency test. The chapter 1. What was your answer? Second one. Or 2. Fourth one. Anyone else? Any other answers? 3. So Shona had always been resident in UK for tax year 23-24. She spent more than 90 days. So in the tax year 23-24. So she's filling 90-day tie-up. So Shona's only relative is her father, who is a UK resident in 23-24. Shona owns a house in UK available for her whole 23-24, and 6th of April 23 she bought an overseas house and she spends 260 days here. So during 23-24 she lived in UK for the remaining 105 days. Okay, remaining 105 days she is living. She is neither employed or self-employed. How many ties does Shona with UK for tax year 23-24 for the for the purpose of sufficient ties test for UK residents? So will you get these rates in your fact sheet? So in your fact sheet, when you go to your the ties, so you're living how many days? You're living how many days? 105 days, which means this is falling between 91 to 120 days. So if you are a previously a UK resident, you need to have 2 or more ties. If you are a non-previous resident, you need to take 3 or more ties. What should be the answer? The answer is there. and she's having a house too. It needs to be two ties. So see, I didn't waste my time. It needs to be two ties. Mhm.
He spent more than 90.
That is 90-day tie test. They have given the ties. Here they are not asking what are the ties. They are asking what are the how many ties that she needs to have. How many ties? Yeah.
Then can be another type. In third line also can be a third.
Yeah, that's more than two. It's that's something. And minimum is two. No? The question is minimum. They're asking how many ties. The question is this: how many ties does Shona have with UK for tax year 23-24 for the purposes of sufficient ties for UK residents? So to be UK resident or you to be taxable, how many ties you need to meet? So how many ties you need to meet? You need to meet two ties. So it's a method of how you have now. I know that what you are trying to say. What you are trying to say is you found that okay, there is accommodation tie, there is a family tie. So you have counted the number of ties which is already given in the question, unnecessary. But they are asking how many ties does she has with UK for tax year 23-24 for the purposes of sufficient tie test. If she has two ties, that's more than enough. That's the reason why I had to go to your fact sheet. Otherwise, I'll tell you another thing. So she's available. So accommodation is in UK, isn't it? She's already living in 260 days now. So accommodation tie is met. Then the 90-day tie is also met. Family tie, is it met?
So it was relative, right?
Shona's father, see, in this case, Shona had been always in UK. That's fine. That shows that she is a previously UK resident. Second thing, it shows the 90 days relationship. Third thing, it shows her only relative is her father, who is a UK resident in 23-24. So he is becoming a close relative in 23-24. Okay. So then the work type. Does she qualifies for work type? She does not have any work type. So she is present in the UK for the previous ties. 90 days time. Country tie is she making? She's not literally making the country tie. She's not. She's more days should be spent in UK. Okay, take down this point. I'll give some points for you all to take it down. So in case of Shauna, okay. First you can say Shauna meets two ties. Shauna needs to meet two ties. Shauna needs to meet two ties to consider herself as a taxpayer in UK. First point. She meets the accommodation tie. No, not because of the father. She meets the accommodation tie. I didn't get you. Yeah, that's what I'm saying. She meets the accommodation tie in the UK as she was available in UK for 105 days. So she was there, right, in UK? Because Shona has its own house. You got it? She's having her own house. So obviously 105 days she would have lived in her own house. Then you also say she stays more than 90 days in UK. She has spent more than 90 days in UK. So you can also say in either both previous two tax years. Previous two tax years. Then you can also say she does not have, the next point, she does not have substantive UK work. So she's not making that. I'll ask you a question before I give you the next thing. Can you consider Shawna's father as her close relative or not? You can't. Take it down. Shawna's father is not treated as a close relative. Shawna's father is not treated as a close relative. Relative, you can say within brackets. Spouse, civil partner, or the child under age of 80 is considered as close. Shawnas. Who are the three? Spouse is your own wife or husband or wife. Civil partner, you are not married, but you are living in a relationship. Okay? And your child, who is under the age of 18. If he is 19, then he is also not. Now, will you choose Shawna's father anymore? This is the reason I gave you all those points. Fine. Then, now even if you see, now she meets only two ties there. She meets two ties. You got it? All the other ties she's not meeting. How many ties she needs? Both. It needs to be two UK ties or more. So minimum two. So technically you need to meet only two. So now only she is meeting two. Okay. The next one. Seventh one. Can remember the calculation for this, the workings for this. Ronald is self-employed. So he purchased a house and lived in it for how many years? 2 years. So he's living for 2 years. The house was then unoccupied for 5 years. It was unoccupied for 5 years because Ronald went to work outside the UK. He then lived in the house for 3 years. Ronald then went to live with his mother, and the house was unoccupied for 6.5 years. These things are important. That's what I'm highlighting. Finally, Ronald lived in the house for the last 6 months of his ownership. So how many months how many months of Ronald's 17-year period of ownership of the house will be exempt for the purpose of private residence relief. So how long during the 17-year period of ownership you will get an exemption? How many months?
Exemption is exemption for PRRA.
Yeah,
If you have lived and the 9 months is it?
only have lived.
The 9 months.
Yeah. Now let's see all the rules. So I'll tell you what are the chargeable months and what are the exempt months. Okay, fine. So let let us work it through now. This is a working you need to do. So let me take it for you. Right. The first thing you need to understand, what are the exempt months and what are the chargeable months. And you can have the total. Now these questions is not direct. However, what is the actual occupation? So actually, how long he's living? So he's actually lived there for 2 years. So which means 24 months is exempted. 24 months is exempted. So then you need to understand your deemed occupation. What do you need to understand? You need to understand your deemed occupation up to 4 years. Because you were self-employed. Up to how many years? 4 years, because you were self-employed. So then, so the house was then unoccupied for 5 years. So 12 into 5, how many years? 12 into 5? 60, right? Because 5 years means 1 month, sorry, in a year you got 12 months. So it will be 60 months, which is exempt. You're not living. Then the next one, you need to see what is happening after that. So, and he went outside the UK. He then lived in the house for 3 years. What? I didn't get you. Yeah, you can take the 4 years, but he is also the you can take it 1 year as he is going to overseas. Okay, so let me come back to that. You see, he went outside UK, so that's why you can take everything. So he's going overseas. Okay, so 4 years, but here I also mentioned the deemed occupation up to 4 years you need to take. Then the 1 year since he was overseas. Okay, so that's why I'm taking the next year as well. So that is also exempted. So he was not there, it was unoccupied. However, then he's coming back, right? Then he lived in the house for 3 years. So another actual occupation is there. So he's coming back. So the actual occupation is how much? 12 into 3, 36, no? 36 months. That is also exempt. Deemed occupation means how long it can be just left as allowances. Maximum up to 4 years. But since he lived overseas, that is also, he's not in the country now. So that is also will be applicable. as exempted. Okay.
Even if the person lives 5 years, 6 years, in amount of years, it's exempted.
Gets exempted if he is in overseas. In the country means no.
And living in a different state.
State no, because now he is living with his mom, right? So now let's see. That's what I'm going to go to the next part. When we come to the next part, you'll understand that. So now what happens? Now I'm going by each and everything. The 3 years is also done. Now he is going to live with his mother, isn't it? And the house was unoccupied for 6.5 years. So then finally, Ronald lived in the house for the last 6 months of ownership. So out of the 6.5 years, last 6 months of the ownership he is utilizing. So which means, so Ronald went to live with his mother and the house was unoccupied for 6 months. So now the deemed occupation, yet again you need to take. So the deemed occupation is to the remaining, I can say to the remaining 2 to 3 years. Okay. Any reason, you can give any reason. Then, so 3 years he is living, so 2 years is gone there. Then here it's how many years? 5 years is gone there. So 7. So then out of 17, 7 gone means 10 years is remaining, right? Out of that 10 years, 6.5, it was unoccupied again. So then there is a deemed occupation yet again. So that is 6.5 means up to 2 to 3 years you can, for any reason, you can consider it as a deemed occupation. So that 24 months you can maximum go up to give it as an exempted. It can be exempted up to 24 months. However, the unoccupied period needs to be 6 years. So 6 into 12 is how much? 6 into 12? 6 into 12? 72. Minus 24 is how much? 48. Okay, so 48 means roughly 4 years, right? 4 years. Fine. So in this case, 10 years is remaining. Of that 6.5 years, it was unoccupied. So you can have only up to a deemed occupation of 24 months. And then 6 months, last 6 months he is living in the house. So last 6 months he is living in the house. So which means it is 6 years. So 6 years needs to be 72. Okay. So then the deemed occupation that you can take thereafter is only up to 2 to 3 years, between 2 to 3 years. So which will be only up to 24 months will be exempted. Then the rest of the other months will be charged. That if, wait, we'll come to that question. That will be charged. That's the understanding. But in this case, you need to understand something else. So from here onwards, so Ronald is going to live with mother, and the house was unoccupied for 6.5 years. Finally, Ronald lived for the last 6 months of the ownership. So for 6.5 years means total number of months will be, with 6.5 will be 70. 78, no? So if you give a deemed occupation here, so he will get 54 months, isn't it? But you can't take in this pattern here. First, you need to relieve the 24 months as unoccupied. And now you need to understand what are the chargeable months. So in this period only, we need to determine what are the chargeable months that he needs to get. Okay. So to determine this unoccupied, so okay, let me give some points, then you can understand how this, how am I taking the calculations. Yes, remaining 2 to 3 years.
So first 24 is exempted, and then remaining 2 to 3 years.
Up to 2 to 3 years. Okay, first I'll give you some points and then I'll take you all through the
4.5 years, 6.5, we are reducing 24 months, right?
yeah. Yeah. Now this 6.5 years we are taking from here. So out of this 7 only you have utilized. 7 and 6 is how much? 13 years. So still 4 years is there. You got it? Now I'm taking the 17-year period of ownership. He is having 17-year period of ownership. So that is where we are taking the total as 70. Okay. Right. Take down this note. Then I'll tell you how I'm taking the months. So sometimes you might be confused what I'm trying to do with the months. Okay. So you can say the last 9 months ownership rule, the last 9-month ownership rule, and 6 months actual occupation needs to be considered. 6 months occupation can be considered as exempt month. So that will be yet again the last, I will say last 9 months. Okay. Then another point you can add, the overseas period, the overseas period is fully exempted, if the taxpayer is employed outside UK. Outside UK. So out of this 6.5 years, so this 6.5 years, if you take, it will be how many months I told you? 6.5 years means 78. Of this, 9 months is the last 9 months rule. Okay. Ownership is also included. So that's why I wanted to say that. That's the 9 month you need to take. Then how much you get? 70, not 70, 71, 69. No? How much you are getting? 69. So from this 69 period, if you take this 24, what's the answer you are getting? The next reason, you can, the deemed occupation remaining 2 years up to 3 years, any reason that you can take in this case is only up to 24 months. Why do I say 24 months? Because that period he is living in the living with his mother in the house. So he can't go up to the maximum point because he is already have taken the amount of the number of months he is supposed to utilize. Because now see, at the beginning, the actual occupation is 24 months. So which is this I'm talking about. Then the deemed occupation up to 4 years since he is self-employed. Okay. And he's being self-employed and overseas. So he was overseas for 1 year. So we took that 6 months. And then the deemed occupation, sorry, actual occupation was 36 months. Then the deemed occupation you need to take for 24 months. So up to this, how many months he is living? Take up to this 24, 60, how much? 4 years. So then, so is it 4 years? 2, 4, no, more than 4 years, no? Here it's 5 years. Get the total. Here it will be 5 years, here it will be 2, here it will be 3, yeah, 2. So how much? 5, 3, 8, 10, 12. 12 years. So up to this point, these are the exempt month he can claim. Okay. So then the remaining is what? 6.5. On that 6.5 rule, you can take 9 months. Okay. So inside this 9 months, I'm saying that 6 months of actual occupation is also there. So which means the chargeable months, which was unoccupied of 51 months. Did you understand that? How I'm getting 51 months? 51 months means for 5 years, it will be how many? 12 into 5 is 60. 60 years. So 60 months, of that 9 months is the month that you are the last last 9 months ownership rule. So the last 9 months ownership will be exempted. So then the 51 months. So how many? 51 months. 51 plus 9 is how much? 60. So there it will be 5. So now total 7, 3 is 11, 11 plus 2 is 15, 15 plus 5 is how much? Yeah. No, I'm taking the last 60 divided by 12 is how much? Last 5 years. So in this last 5 years, you need to take the 9 months out. So that will be 9 months of ownership rule that applies. So up to this point, 2 years he's already exempted because he was actually occupied. 2 years he is already living because he is actually occupied. 2-year rule is gone. Then you need to get the deemed occupation because up to 4 years. And then why we are adding the 1 year? Because he is overseas during that period. So up to that, how many years he has occupied? 7. The total I'm saying. Total 7. So this total is entirely exempt. Now the remaining 10 years is there. Of that 3 years he is living. So in the 3 years, that is it is his actual occupation. So since he is living his actual occupation, so that is also exempt because it is his own house. No? So 13 years is covered. So the total period he is living is 17 years. You got it? So if I say up to this point, 5, 7, 3 is 10, then 7 is remaining. During the 7-year period, they are telling that 6.5 years. See, the remaining so he was unoccupied for 6.5 years. However, finally, Ronald lived in this house for last 6 months of his ownership. You got it? So in that essence, you can go to a deemed occupation of another 2 months period. So that will be given to him as an exempted period. Because the 4 to 6, the maximum allowance he can be remaining is 2 years only he could go in his range. He can't go up to 3. 2 to 3 years he needs to be. So it does not necessarily needs to be 3. So forget about this. Now you won't get confused. So the remaining 2 years he will get exempted, but I'll come to this remaining 2 years it again. Okay, because that is another part that you need to understand. Then I know that this is not a straightforward thing, a bit confuses. Now they are telling that in this 6.5 years, 6 months he is living with his in his house. The rest of the days he went to his mother's house. Okay, so then uh, so you had 10 years, then out of 6.5, in that 6.5 year period, 9 months rule you need to take it out. Okay, so 6 into 12 is how much? 72. So in that 78, 6.5, 78. No? So you had 78 months. I'm talking the years of months. So then you need to take -9. So because the last 9 months rule, so that will be exempted from that. So that's how much? 69. So in this 69, 2 years will be waived off to him. So in this 2 years, 9 plus 4 is 5. 6 plus 2 is 4, 45. Oh, 45 months, not 51, my bad. I dropped 50. That's 45 months he is unoccupied. That will be chargeable. So now you need to take the total number of months that he has lived. So what is the total number of months he has lived of all these things? 24 plus 60 plus 36 plus 24 plus 9, 153. So he has chargeable months of 45 months. Of that, this is 24, 60, this is 36, this is 24, this is 45 plus 9 is how much? $198. So now you need to understand the chargeable months is 45, exempt months is 153, and the total months is 198. So difference is 45. So you don't get a 45 month there, no?
16 year one count.
60, no.
16 years. 204. But they got 109.
16 into 4. How much is getting? 204 divided by 12 is how much?
70.
17 years. So that needs to be the 17 years. So how many years we have got? 198. So we are short of, that needs to be equal. So we are short of how many months? Short of 6 months. Okay, my bad. This 45. Okay. In this 9 months rule, anyways the last 9 months is included. So in this unoccupied period, 6.5 years, right? So that 6.5 years, I told that the 6 months he is living, so that will be included in this 9-month rule. So still you will go with that, the 6 months added here. So now how much you get? This will be 45 plus 6 is 51. Yeah, that's how you need to get the 51. So now here you get the 51. So now it's totally so much? 204. Yeah. The confusion is the last 9-month rule. Mm-hmm.
But we take 24 months, right? But how can it's 24 months?
Okay, that is the rule on the deemed rental occupation path. So let's go through that part. So that is the tax rule. So that how much rent over the period that you can live, how much you can get exempted for during that period. So that deemed occupation, how we are now, even in the first part, I'm getting the deemed occupation up to 4 years because he is in abroad and he's self-employed. Okay, so in this case, he's coming back after this period. So he then lived, he then lived in 3 years at his house. So these 3 years, only 2 years is valid to get the exemption.
Out of the 3 years.
3 years. So that's why I'm taking, no, see, he lived in the house for 3 years. Ronald then went to live with his mother, and the house was unoccupied for 6.5 years. So during the 3 year period of living, the deemed occupation that he is going to get through that, sorry, actual occupation is 3 years. So then after that, this house is becoming 6.5 years, but he's still in the country. He's not out. So then he can go up to 2 years of another deemed occupation as exempt.
If a person is living,
Deemed means we are thinking that if he would have lived.
so, uh, out of the overseas,
Mhm.
employed somewhere else for about, let's say, 2 years. So then, can we apply the whole of the 4 years or only for 2 years?
Whole of the 4 years or only for?
2 years.
Uh, Ask me the question again. You are living.
Let's say X person is living overseas for 2 years
Mhm.
due to employment reason.
Mhm.
When we apply for exemptions, do we apply only for 2 years or can we apply for all of 4 years because we are given a grant?
Anyways, the 4 years is first you will be getting that since you are being self-employed. Okay, the 4 years up to deemed occupation, you will get it. The overseas, the number, anyways, during, if you are overseas, of course, you can't live in your house, right?
So what I'm saying is, if the person is living not only for 2 years overseas,
Okay.
coming back to Sri Lanka,
Mhm.
but since the rule is 4 years, up to 4 years, you can apply for exemptions.
Exemption.
So then can we apply the whole of 4 years? Or can we only
No, then the actual start period will be starting. So he'll be getting only 2 years.
we only get
Then we'll be counting from once he comes back to the property or to the country. So that will be considered as occupied or unoccupied.
if he lived in the house for 3 years,
Mhm.
so how do we get the 24 months
Okay.
occupation?
This deemed occupation 24 months, that you need to take for the remaining 2 to 3 years is there, right? In the remaining 2 to 3 years, you can go up to 2 years of deemed occupation of your total living. So we are going up to 17 years, right? So in that 17-month period, you can go up to another, the remaining, after giving the first 4 years, the remaining will be another 2 years that you can go between that 2 year period, along with the 9-month rule. This is given for exemptions. All the other months will be the income that he is generating from the other months, or the other month, the months will be charged, will be qualifying for taxes. These months will be exempted for the taxation purpose. Yeah.
This the occupation of 2 years, then what is the criteria it has to be met to get the 2 years?
Okay. The criteria, that's what I'm saying. When you take your total occupations, once you travel up and down. So from the last year of ownership relief, you see the first 9-month rule. Okay. So then it is still unoccupied for 6 years, right? No, the 6.5 years is unoccupied in this essence because, but still he is in the country, but his premises is unoccupied. So here you are trying to calculate, is he eligible for the relief or not? Is he eligible for the relief or not? That is the thing. So 6.5 years is taking, 9 months rule will be exempting from him. So is there any months he can go for more? So there, if it is between 2 to 3 year periods, it's more than 2 to 3 year period, right? You can't take the 4 years there because that is the last remaining part that you are living because you are coming back to your house for the last 6 months. You got it? So from that period, after applying the 9-month rule, then you can go back to that 2 year exemptions only. That's the maximum that you can take. That's the tax rule for the residential purposes reliefs. Okay, we'll do a separate question on that. Okay. Now here there are some MCQs, right? So there can be some hidden facts inside. So to get off the hidden facts, 9-month rule is permanent. Last 9 months that you're occupying will be there. So they are considering the oversight because the UK, because they are not to tell about the overseas, so can only exempt up to 4 years. No, he went to work. So since this reason only, you are taking that the outside month. So up to 4 years you can take as the exemption. So the fifth year also we are taking as a result of he's going for work purpose. That is clear. The first part. The second part is inclusive inside this 6 to 6.5 years. Yeah. What do you say? Then no need of deemed occupation. Yeah, that's correct. Yeah, I know that you didn't get that part. You and a few others also here. Okay, we'll come to that occupation part in a while. So leave as it is. So how many? They're asking the exempt months, right? The exempt months needs to be 153. Yeah, the exempt months needs to be 153. So you all understood this part, no? Did you understand the actual occupation part? This one, the deemed occupation, the second one. Then this 1 year, why did I take? Because he's working outside use overseas and he was employed. Then he's coming back, so his actual occupation that is also exempt. So the deemed occupation is happening between the last 9 month rule and the maximum remaining deemed occupation is entire he can go to 6 years. Which one? No, we need to take the number of months. This is the exempt months we need to go. 153 I have taken. Yeah.
So 4 years we gave the deemed occupation and then 1 year remaining.
That 1 year only we are adding it here. So to 60 months, no? You're taking 60 months there.
But we can only give exemption for 4 years.
We can go up to 4 years exemption, but if he is overseas for work purposes, it can be given. The overseas, that 1 year of overseas period, since he is employed, that is also being calculated. Did you understand that part? Fine. The deemed occupation for the last 2 years, that's on the remaining balance we need to take. So I'll give you the ruling part for that later. So otherwise in this question you will get confused with 6.5 years what they have given. Okay, fine. So let me mark it up. This is the rent relief, right? Private residence relief, sorry. Okay, we'll come back to that part. Then 8th one. Charlotte's tax payable for the tax years 22-23 and 23-24. So income tax on trading income is 9,000 and class 2 NIC is given, class 4 NIC is given, and capital gains tax is given. So what is class 4 NIC? Contributions from his trading profits. So Charlotte made an appropriate payments on the account on 31st January 2024 and 31st July 2024. What is the amount payable due on 31st January 2025 for the tax year 23-24? So how did you calculate this? Did you all get any answers? Nivinka, you got an answer? You didn't get an answer? With this? You? Third one. Any others got any other answers? No. First one. So here in this instance, they're telling that Charlotte is making appropriate payments on account. So he is paying his dues on time. Okay. So the first part, when it comes to his income tax, so the liability by 31st January 2025, how much is the amount that he needs to pay is what they're asking. So in this case, as of 23-24 you are liable 10,600. So he is making the payments as appropriate on account on 31st January 2024 and 31st July 2024. Every 6 months only you need to pay. There is 3 installments that you need to pay. So in that first installment, he would have covered all these payments, isn't it? So from this 10,600, this 9,000 would have been already being settled. So that will be how much? The remaining that you need to settle, that will be 1,600. Okay. So then class 2 NIC. So class 2 NIC you will be settling within that year. So you need to settle whatever the class 2 NIC for that particular period only, because class 2 NIC is settled by whom? Class 2 is given by whom? The employer. So the employer he will be contributing that particular year's NIC on that particular year itself. Okay. So class 2 NIC will be settled as not self-employed. Class 2. Yeah, self-employed. So he need to contribute to that your pensions schemes that particular year only. So see, in the theory part I would have given some notes on that. Then class 4 NIC. So when it comes to the class 4 NIC, you need to take 1,350 and 1,800. So this class 4 NIC is paid on what? Class 4 NIC is paid on what? Self-employed. So class 4 NICs and income tax is paid on account. So which means this is also will be paid. The previous year will be paid along with this year, because every 6 months, right? You pay it on 31st January 2024 and 31st July 2024, every 6 months. So this class 4 NIC and income tax is having the same rule. We need, because the mode of payment is different. How you are contributing to the how you are making the payments is different. Okay. So that now when you go to that note of NIC contributions, this part will be clearly stated how class 2 and the income tax is being paid. Go to the payment section of income tax part, income tax administration, I think chapter number 11. Yeah. So normally what you need to know now you don't go back and try all those things. The simple method is income tax class 4 the same way. Take the existing year's liability, deduct the previous year's liability. Okay. So now in this account you will be remaining to pay only 450. Then when it comes to capital gain tax, okay, capital gain tax, capital gain tax you need to take only that particular year's income, because capital gain tax you need to pay in 60 days. Capital gain tax you need to pay in 60 days. So this 1750 would have been already settled. The due date for capital gain tax is 2 months from the gains. So this is 22-23 period that would have been already settled. So the amount payable is totally 4,970 itself. You got it? Because you have 3 slabs to settle. Let me take my tute. The amount getting paid only, but we are calculating payable. No. That's not the answer. The total of that will be the answer. Total of all these things is the amount payable. Total and see, do we have an answer for this? So the income tax and class 4 NIC, I told you the method. So income tax and the class 4 NIC, class 2 NIC and capital gain tax you need to pay only for that particular year's liability only will be remaining, because you need to pay then and there class 2 and capital gain tax. But income tax over the year only you will be paying. So when you are paying over the year, there are 2 installments which will be falling under one particular tax year, which is on 31st July one part and 31st January the other part. You got it? But your tax year will be falling in April. That 50% is what we are. Okay. If you take the total, because entire this will be covered during this period. No? Before, when you come to 23, 24, in 22, 23, payment on account for balancing payment. So balancing payments means the amount that is remaining. So you would have only the NIC and things would have been paid. The others is remaining. No? The others will be remaining payable at 23 by 31st January 2025. You got what I'm trying to say? Because income tax and class 4 NIC, you will be contributing on that quarterly basis. You got it? So in 22, 23 period, you would have paid 1, and 22, 23 period, you will be paying 2. But when it comes to 24th financial period, you would have paid entire amount. Entire 9,000 will be paid. But in the 10,600, the first portion will be paid. Then by 31st January, the other portion, 31st July, one is paid. The next 31st December, that quarter is one is paid. 31st December to January, that quarter you are paying one thing. The rest is balancing. You got what I'm trying to say? So that is how you are going to take for class 4 NIC. So the easiest way to take for class 4 NIC and the income tax contribution in a question like this, you better for class 4 and income tax from the current period reduce the previous period. That's easy. Because here you can't give the pro rate and calculate. You will just wait your time because nothing is going to get. So are we getting an answer if you do in this way? Yeah, unpaid. But when it comes to class 2 and capital gain tax, only for that particular period's liability you need to take. So that will be 179 31st January 2025. Exactly. Plus 450 plus 4,097. You got an answer for that? You got it? Third one. 7,020. So you 7,020 means how did you get it? For income tax, how much you charged? You took the 50%. You took the current year 50%. Yes. Then class NIC also you took 50%. Everything you took 50%. This and this. No, don't take in that way. Because no. That is the payment on account. So here they are asking the amount payable. So I'm saying that amount payable, that okay. What you're confusing with income tax and class 4 NIC is how much you need to pay. No? This is the previous year. The previous year liabilities also will be paid in the following tax year. Did you understand that? So that will be carried forward to the next year. So when you're paying for the next year, what will happen is 22-23 period, you will be coming across 2 quarters, 2 payments. And the third payment will be paid in 31st January 2024, which means entire 9,000 is settled. That 31st January 2024 is coming in our financial period. Sorry, not financial period, in our tax period. So the remaining balance that we need to settle in our category, now these are given, these are remaining balances they are giving. See, Charles tax payable amount they have given. For the tax year 23 and 24, the payable amounts are given. So which is not the total amount they are giving. You got what I'm trying to say? How much is payable? So how much is payable means the first 23 would have been fully settled. Okay. So the amount remaining, now here it's a calculation technique I'm saying that since they are giving the tax payable, you can't take that 50%, the 2 years thing. They have already taken that. So they have arrived at that answer and only they are asking you. Because if they have to take this, they can't give you 2 marks here. they have to give you minimum 6 marks. If they are giving 6 marks, then I'm happy and you are happy. Fine. So what is the easiest way to do if they are giving? Okay, let me also tell that for you. So if they are giving the closing balances, they will now note this part. If they are giving the closing tax payable figure no, they are giving how much you need to pay. So they have already calculated the amount payable. So both the years the payable figures is given to us. So it's matter of getting how income tax is paid and how class 4 NIC is paid. So when it comes to 22 to 23 period, this 164 and this 1750 should have been completely paid during this period itself. But now it is 31st January 2025. So by this date, this would have been entirely settled. Then this is the amount payable. So it's like drawing your T accounts. Okay. So this is your opening balance and you have your closing balances. This is not telling that how much you need to exactly pay. So the balance on payment account, always take the differences for these two and take the exact figure for class 2 NIC and CGT. That's the easiest technique to do in an MCQ. Okay. So when they are giving the tax payable amount. Fine. Then ninth one. Then the section C part, section A and B is the strategic part. Normally what I used to do is when I used to write the tax paper, I come to the MCQ parts at the last time. I go to the section C part, my personal thing. Okay, I go and answer all the section C part questions. Once I answer the section C part, then I'll come back to the section B part. That's how I answer. Section C, I fully answer. Because section B is going to be based on that incident. Based on that incident, they will ask you how much. If it is, for an example, if it is income tax, they will give you a person's income, contributions or reliefs, or whatever. That is going to be the question. So B and C, you have more information to answer. Section A, you have less information to answer. So what technically happens is we waste more time in section. But section A, I'll tell you the other lucky part. Though you don't know the answer, if you have 5 minutes left, at least you have an option to choose ABC. At least the last resort, I'm saying. So don't try your section A part first. You got it. I didn't want to say this, but I'm saying this. Because if I say that, you'll be following that. That's what I'm saying. Do B, C first. I normally do C first. Because C, you'll be getting around how many marks? 50, 40, 45 marks. No? 45. Not 45, yeah. 45 marks you'll be getting. Then B, because it's based on the case. So in that case part, I will take.
The really technical issue, can I say?
Oh.
You stay there.
Okay.
Why is it so warm?
It's 29.
Can I use it?
Yeah, I used it. Because section A parts, you will be having to answer the two markers, right? So you get the options for it. It's only 15 now. You got 30. It's easy for you to go to that last. There you get less information. Okay. Okay. Sorry. Okay. Sorry. I'm becoming big. So that order would ease your life because there it will be income tax and CGT. No, sorry, cooks, not CGT, corporation tax? No, the last part. So answer that part first, because you know most of the rules in and things that you need to calculate there. Because the bigger part, when it comes to MCQs, they will ask the administration part. So I would prefer you going to the administration part at the last, not at the beginning. Okay, fine. Then, in this case, on 1st of December 2024, Devonte has issued HMRC with a notice of file his tax return for 23-24. So Devonte is submitting his tax return on 20th February 2025. HMRC wants to do a compliance check. They want to check. Complete the following sentences about the submission, the online return, the date HMRC will have to notify Devonte for a compliance check, and matching date for submission of tax return, and the date of notification on the compliance check into relevant target area. The due date of submission of the return was 20th Feb, 28th Feb, 28th Feb of 26. So which one it needs to be? It needs to be for tax year 23-24. The due date of submission return is on 20th Feb 2025. That is the submission date online. Okay, so that is the date that he needs to do what? So the due date of submission of return, and HMRC must notify on that date itself. That's the date they are deciding. So that is when 28th. It needs to be 28th, not 20th. 28th of February. After within 1 week they need to notify. Okay. So that will be technically 28th of Feb 2025, the same year. They can't wait a year and inform them. You got a date for that? 2025? Yeah, that needs to be the second one. Then, Devonte of a compliance checks into return. By which date he needs to do the compliance checks into return? So he needs to do the compliance check by 20th of February 2026, because he will give a period to take it up. So these things is from your admin part. So when it comes to your admin part, when you are having your, I can't say it's a free time, when you're having your lazy time, go through your admin part and summarize this point. By which date you need to pay. Okay. Then shares. How many of you all tried this? You tried this? How much you got? 1,179. Point also you got. You didn't get the answer for this. 6,000? 75.
They asked the phone number only, we don't need to put right.
Okay, let me check what you have done. Castor sold 4% of his holdings. How much? 4% in Entix on 15th November. Castor PLC had purchased 10,000 shares for 20,000 pounds. How much they have purchased? 20,000 pounds. That is the purchase. And was one for 2 rights issue at 2.5 share. In December 2017, Castor PLC took up all its rights. Okay. The indexation factor in July 2010 and 2017 was 0.919. What is the indexed cost of the shares? So you need to find the indexed cost. You need to find what? Index cost of the shares. So when you are determining the index cost of the shares, as of July 2010, you had how many shares? 10,000 shares at a price of 20,000, isn't it? So then you need to add your index because the value will change. So the indexation as of this date, December 2017, is what they have given to be indexed. So this 20,000 pounds share will be indexed at 0.190. That's how much? $20,000 into 0.19. So that is going to be 3,800. So that's going to be how much? 3,800. So then in December, you are purchasing more shares. That is happening in December. No? So you are telling that 10,000 shares. For that, if you are holding 2, okay, you are getting how much? 1. So at a price of 2.5. So that will be how much? 12,000. Yeah. 5 into 2, 10 and half will be 12,500. 12,500. So the total index cost. It's an easy one. How much? 300. 36,300. That's your answer. 12,500. That's the right issues. You have total number of shares is 10,000. So you are taking up all the right issues. So every 2 you have, you get 1. So 10,000 you have means you'll get 5,000. So 5,000 into the price of right issue is 2.5. So 5,000 into 2.5 is how much? No, that is happening on 31st December, no? That is happening on 31st December. You don't want to index that. Indexation means as of today, what is the rate? Inflating. November 2023, because you sold whole of its 4% shareholding of Entix. So whole means this is the whole amount of shares that you're holding with Entix. Now, but did you take the 4% of 36,300? No. You did. Okay. Anyone misunderstood in that way? Index is 3,800. No. What is the index cost of the shares sold in November 2023? So you are not going, you need to take the total value. This is the total index cost. This is the index cost of the valuation. The total value. Not the indexation cost. Oh, that happens, no? But I don't understand, how did you get this 1179 and 617? Just tell me, how did you all arrive at that? You all took the total and got the 4%, or you don't want to index that? No. You don't, because they have not given the indexation allowance. One, same. Okay. Take a fact there. Take a fact. Indexation allowance is frozen by 2017 December. The problem is, that's the theory. After 2017 December, it is not indexed. Here. No, that is happening on 31st December. So on the last day, 31st December means 1st of January 2018. Not 16. No. Yeah, December. But it's fair. What you are saying is fair. can take that way, but still the higher probability you need to go with the total index cost. Anyways, you are going to the total index cost, but you have, okay, if you index this will be less some answer, that will be correct. But however, the only thing is, if the man marks, you will get the correct marks. This part will is computer mark. You need to give the correct answer. Even if it is, yeah. The point wrong means it will wrong because the computer reads algorithms, right? Yeah, I know that. So, were you able to fully cover the paper within 3 hours? Section B was very difficult. Seriously, this is a bit of a hard paper. I wanted to be little hard this paper because no worries, you want in your exam it won't be this hard. Okay, trust me, it won't be this hard. That will be more direct than this. These are little indirect questions. This is from your BPP kit. Yeah, I will do all this. I'll send you all the answers also. This is a mock paper done at BPP, one of the toughest. Because see, in all these things, there are hidden factors. Why we are learning this part is like when we do these questions, then only the other questions will be more easier than this. Okay, fine. Those I was planning to do that these questions, what the debriefing questions, the pre-mock paper of ACCA. You didn't try that? That is available in your study hub. Just show it to her. Okay, because I didn't do it because they have given the answers for that, no? I didn't get you. We'll see how long we go. Okay, we'll try to finish it. Right. On 12th August 2019, when is your exam? What time you are sitting? Morning hours? Morning 9 o'clock. You're also sitting morning 9. Morning 9.
Sir, is it laptops or even monitors?
Monitors. Desktop. You'll be getting a desktop and a keyboard and mouse. Why? Your taxes of a paper. You made your wrong choice, I said. But it's okay. For you, tax shouldn't be the first paper. No, that's what you should have chose something else. Why did you choose tax? Why? You are supposed to do only tax paper then. Alright. Okay, fine. You have to do anyways.
Yes,
Even the next okay. You did what degree? Alright. What's your university? Alright. Fine. So let's do this.
so you have to somehow pass this to go to the next stage, or can you do papers from that and then come?
Which one? Final level?
Yeah.
No. You have to complete skills, then only you will be eligible to do professionals.
Step by step.
Step by step. But in the knowledge and skills, you can do some of the papers. There is a other route, like when you get exemptions and things like that, you can do that. But here you can't do it. You have to completely.
So, if you degree and say after you finish ACCA, you will be one of the markets
You have a degree and
of education.
yeah, SIMA will be done. Sometimes the management accountants now they are changing things. They might ask you to do the last 2 papers. They can ask you to do the last 2. But CA you will get it when you do ACCA. But for you, I'm doubting because you are coming through exemptions. Those who are fully doing ACCA, the CA membership will be given. But for your exemptions, I need to check with CA. Now CA is updating their syllabus next month. Don't you see? The payment account in addition for your customer.
Membership in ACCA.
Mm-hmm. Yeah, that's how it works. 4 years of membership. Okay. So and it also says that there is another condition. What if condition? Let me check that if conditions applies, because ACCA changed all their rules 2 years back. Let me check with that.
No, I just exempted my final stage or then I just moved to 10.
Now, what will happen is after getting all those degrees and all those qualifications, one day you'll sit at your home.
Then you won't know anything.
No. And you go for a work. Whatever we do here is not exactly that. You need to learn again. Now, trust me, I'm doing tax returns for Australians. Okay. The taxation rules there, and the taxation rules in UK is a little bit different, because the same implication, but the application is different, totally different. The wordings and things like that. You need to study that separately. You got it? So, I don't know. We need to know the knowledge. Our parents are forced to get the knowledge. So, we are supposed to get the knowledge. We need to learn to do business. That will survive you over the years. Okay. Fine, let's do this CHT part. On 12th August 2019, patients made a gross chargeable transfer. So it's a CGT. After all exemptions is 175. Okay. Then on 24th November, he gave to a trust 180,000 pounds to a trust. Patients agreed to pay any lifetime inheritance tax. How much IHT will be payable by patients? So patients is the person. Okay. On November 2023, the transfer of value. So how much did you calculate it? What's the answer you got? 1, 2, 3, 4. How much you got? You got 12,000. No, it's okay. It's okay. No, fine. We need to test know where you went from. That's why I'm getting the answers. 12,000. Then you 7,005. Okay. So in this case, what we need to understand is you need to understand what is a CGT and what is a PET. So PET will be payable on death. So patients is still there. Okay. So whatever the CGTs needs to be taxed, isn't it? So the CGT that needs to be taxed is only 180. So you need to take 180,000 into consideration. Now getting this 180 is what you need to understand first. If you didn't understand that part, your answer will be wrong. Did you get that part? That is the gift that you are getting. So on this, you will get the annual what? Annual exemption. What is the annual exemption? 3,000. But here, this is 2023. Before that, you have got in 2019, which means in 2022, you would have not received. So you can take 2 years exemptions maximum. So which means 6,000, which is one for current year, and the other which you have not used it for the previous year. That's a maximum you can get allowed. So now you need to pay how much? 174 will be qualifying for what purposes? What purposes? IST purposes. Inheritance tax will apply. So the nil rate band will be from 325, isn't it? Of that 175 you have already used. So what is the available balance from 325, 175? It is gone means 320, 170, 150. So 150,000 it is gone. So balance is 24,000, right? That into what is the IST? What's the IST percentage? What's the IST percentage? 40%. If you take 40% on this, what is your answer? On 24,000, if you take 40%, what's your answer? What's your answer? 24,000, 40% is how much? No answer. IST rate is how much? Very good. So then how to calculate the payable? 24,000 itself. 25%. That's what I'm asking. If you take, first we'll take at 40%, then we'll say why we are not. If you take 40%, it will be 9,000. How much? 9,600. 9,600. If I were the examiner, I would have given this answer also in these brackets. That's what I wanted to say. What you told was correct. Why you are not supposed to charge 40%? That is the learning point I want to teach. Why you are not charging? Your answer is correct. Why you are not charging 40%? Because he is not passed away. So IST will be liable only after death. So you are not calculating the taxes before you die. But you need to pay before you die at 25%. So what is 25% on this 24,000? 25% is the given rate for IST purposes. So IST rate for that's for CGTs normally. Chargeable gain transfers only will be taxed in the lifetime. How much is that? 6,000. Do you get that answer? No answer. You got no. Where did you get no? Where did you get wrong? That is gross chargeable. That's patience. That is ignored. That is not relevant. It's hard to take. I don't know. Wait. No. You all want? No. I'll have to idea. You all can. You took the first one. What is this? Patients made a gross chargeable transfer after all exemptions is 175. This will be covered by 325.
Yeah.
So 175 you give. 150 you remain.
Yeah.
So from 180, you are giving another gift to 180. For 180.
Asking the IHT on second gift.
How much IHT will be payable by patients on the November 2023 transfer of value?
Second gift.
Yeah, on the November 2023, not only this you need to take. Anyways, if you're taking this, you will get this. You calculate 174.25%. Exemptions is there. You will apply the exemptions. And that probably I am applying exemptions. Now, if the 325 is fully utilized, in that case, your answer would have been correct. In this case, this now that 175, instead of giving that 175, if they have given you 325 at the beginning, then what you have calculated would have been correct. You got it? Right. So, did you understand that? Should we take a 15 minutes break and start? I will take a break and start. It's 29. Okay, no worries. No, now don't decrease it. These questions. Very good. No, this is an easy one. You shouldn't have missed this. Email. Easy ones are there. We'll go there. Because they practice more section A and B parts. See, we have already discussed that we have practiced more, you can understand. These parts only you can understand why what they have been. This is okay. Think 88. That's why I put 88. Because I used to apply certain things and go. Method I do and method BBB and companies. Use this okay. You don't have confined access. It's nothing to me X. I don't know what This 20. For your 20, 20, nothing is 20. Even April.
I got all wrong. Same. I got it. It is done. Okay, let me do that. This one doesn't work. I haven't been used to practice platform. That's how she will for equal. Wait, is that what? Next it works. I did this in my I have just to do the more, but it's not working. Who? No. That's clear good name. Here given the function. No, just type A numbers and equal. Someone from the right side. Okay. Let's see. How do you go to this? I really send me this. Okay. Send me an email. Now, this said before it. It's right. Yeah. This. How will you send from the top? Your email. Just email. Not Gmail, email. Now we will go. That's wrong. The email is out of button. From this cell, okay. This I wanted that. But it's a reaction. Remove. They are all on this website. Send this one, right? This one. All will be in this website. You can go through all tax papers. Even if you send this link, you will directly go to that one, right? Send anyone. send the link. I don't know. I know. How do you Europe and use that? I like to get that Europe something. Like that's two global adventures. Yeah. English and French. I mean that's really nice. Yes. I don't have a page without so then you have to get this CV practice. Okay, to get the notes, you have to use study hub. CV practice and work and sit down and read it out. Then you have to must appear here. I think the Wi-Fi is slow. Yeah, it must appear here. Then you have to select, there will be many subjects, tax PM. Then you have to select tax. For CV platform. Yeah, all the subjects we can do. Okay. So there will be second option, tax. Then you have to click that one. Okay. Then there will be many papers like pre-mock, 24, 24. Yeah. Everything is under CV platform. CV platform. Under this website only. Then that's all. You can like go through. You can go through one. Where you get the pre-mock like this here. Same here, pre-mock 2024. You can just go through, but this one is fun. I just went through the question. It was easy. I just went through the question before class. This one is hard. Now we are doing sorry, please. This is not challenge. How did I go
Okay, so we discussed the first 11. So let's move into the 12th one. So in the 12th one, it is also about the IHT they are testing about. So in this IHT part, Alberto died on September 2023. His only asset was his main residence at 525,000 pounds. Okay. So the which he left to his daughter. So he's giving to his daughter. Alberto had a PET, potentially exempt transfers. After all the exemptions, the value is 40,000 in July 2021. And he had been divorced for several years. What is the IHT liability on Alberto's death estate? So, how many of you all calculated to answer this question? How many of you all attended this question? The 12th one. How many of you all answered this? Do you have any answers? Please, those who attended, please let me know your answers so then we can discuss where you have gone wrong. Okay, fine. So in this instance, the first thing you need to understand the Alberto's case. So this 525 pounds, his only main residence was 525,000. So it was given to his daughter. So he's died on when? September 2023. So if he's dying on September 2023, just give me a moment, I'll load the pen. Yes, Sasmad, I'll show you the answer for the 10th one. So before that, give me a moment. So why it is not working? Give me a moment, guys. The pencil is not working. Rubbish. Right. So is it writing now? Oh yeah, it's writing. Yeah, I was almost explaining the question. So in this case, you have a main residence. So this person is passed away on 3rd September. Anyways, on death estate only, we are calculating the IST liability. So for the main residence, do you have an exemption? Yes. How much is the exemption? Now you can't, these things they won't give. So from 525,000 up until your house value is 175,000 pounds, that is exempted. So the first 175 will be, so let me write in this way so you understand these things better. So I'll go these things a little fast. So when it comes to the main residence, the first 175,000 pounds is not taxed. It is 0. So then from 525, you have, if you deduct 175, what is the remaining? So from 525 minus 175 will be 350. Is how much? 350. So the remaining value of is 350, and also all the other transfers is at 40,000, isn't it? So that will be added to this 40,000. And then what is your nil rate band? Up until 325,000 pounds, you get nil rate band. So after this, you get a 0. So when you simplify this, how much you get? 350 plus 40 is 390 minus 325. 60, 65. 65. 65,000 into 40%. 65,000 into 40% is how much? No answer. 65 into 40% is how much? 65,000 into 40%. 26,000. That's the tax. IST tax that you need to pay. Here the main thing is you should know the exemption limit for what? The exemption limit for main residence, not there. For the main residence, that is 175,000. 325 you already know, that is your nil rate band. That won't be given. Why? Why it won't be given? Why it won't be given? Death estate, because he has passed. Okay, fine. Then the husband wants the answer for the 10th one, right? 10th one is 36,300. You can take a snip of this. 36,300. Right. So let's finish the 13th one. Rebecca started trading on 1st of January 2022. Her taxable turnover for the first 12 months of trading was 5,500 pounds per month. For the first 7 months, her taxable turnover was as follows. So from January to July, this is her taxable turnover. What was the date which Rebecca must notify HMRC that she is liable to register for VAT? So what is the date that she needs to suggest? So she is starting on 1st of January. So this needs to be submitted by when? By when you need to inform the HMRC. So you started to trading on 1st of January 2022. So you need to notify the HMRC within how many days? 30 days. Take a note. Okay. Rebecca is supposed to notify HMRC. Rebecca is supposed to notify HMRC within 30 days. Within 30 days after reaching the threshold of what is the threshold? Anyone? 85,000 pounds. So when she is reaching 85,000 pounds, So January you are making 8,100. Sorry, my bad. This is 2023. So in January 2022, she's making 5,500 a month. So which means 12 into 5,500 is how much? Is how much? It's a simple one. It's not a hard one. 12 into 66,000. Now tell me, is she meeting the threshold? Is she supposed to register? No. So towards the end of 31st December 2022, she is not supposed to. So now January, 8,100. Is she reaches the 85,000 limit? February, is she reaches? Just add on to that calculation. March, is she reaches? So how much is that? Answer is not yet. No. 90,000 is, that's not we need to check. We need to see by when we need to register. Okay. Let's see. Right. That's what I wanted to see. So now, okay, you ask your question.
Fuel. There's a question, exam question, and that's a dictative of we multiply each month. So for January we multiplied and the value is going to be added that separate. Example, we did 5,500 into 11 plus 8,100. So I am giving it here.
5,500 into 11,000. I didn't get that.
Like
Each month.
yeah.
That is what you need to do here. That's what I'm going to explain now. So when you calculate by this way, you are reaching the stage at March. No. So then technically I told you from the date you are meeting 85,000, from that date 30 days. Within 30 days you need to inform. So which means by April or 1st of May you need to inform. Do you get a date here? If I were the examiner, I will give that date too. You need to get this 85,000 on last cumulative 12 months. You got it? On last cumulative 12 months. What do you mean by last cumulative 12 months? The first 12 months I calculated up until up until December, I'm not meeting the threshold. So the next 12 months is going to be from February to next year's January, the total. Am I meeting threshold? No. Then you need to see from March to the next March, April to the next April, May to next April, the cumulative figure. Now do it in that way and see. Now initially this 66,000 is from January to December. No. Are you meeting this threshold? No. So now from this 66,000, technically it is 5,500 you need to reduce. You got it? And if you add this 8,100, are you reaching the limit? Are you reaching the limit? No. So which means now technically this 8,100 is also into this answer, but 5,500 is gone. Why? January is gone. You took it from February. Now 5,500 should be gone. You got what I'm trying to say? So likewise, when you calculate, you need to get the threshold 85,500 in which month? Now see, you will get the answer. Yeah. You need to see by when you are meeting 85,500. 30th July 2023. Even I need to calculate. I didn't calculate. Workings. Yeah, go ahead. Okay. So Pawan, they are meeting by June. So then it needs to be July. Okay, fine. Roshna, did you understand that? 60. So you deducted that. Okay, fine. Yes, you are meeting in June 33. This method is correct. Correct. Perfect. Exactly. Good.
Thank you, sir.
So which means you are meeting by June. So when you go to June only, you are meeting the threshold. No, no. By June, you are meeting the threshold. You need to register by July. 30 days, no? You got it? By June, you are meeting the threshold, but 86 something. 86,800. Pound, you got 86,800? But others, did you understand what I'm trying to say? Because I won't be able to show you the cumulative figures. So every month, now it needs to be last 12 months. It needs to be between last 12 months. Fine. So that needs to be 30th July if you are reaching that point. But did you understand what is the threshold? 85,000. The taxable surplus. That's an easy question. Yeah, two tests is there. So in this case, you don't want, you just see for the 85,000 registration. Here you need to understand to which date they are applying for, because you can voluntarily also you can register, not necessarily till you meet the registration limit. If you want to register yourself, you can voluntarily also request. So here the main point is you need to judge for the turnover. So if you reach that turnover, then you need to register. Whatever the method you use, you need to register yourself. The registration part is only here, it's asked. Okay. So you need to notify HMRC you are reaching your cumulative total of your taxable income by this period. By when? You are meeting June. So it needs to, you need to register before 30th July. Then, which two of the following are requirements required for a VAT invoice to be billed? What are the two things? You need to have the date of invoice. You need to have the date of invoice. Then total invoice price paid excluding VAT. Customer's VAT registration is not necessary. Supplier's email address is not necessary. Technically, you need the date of invoice is crucial. Then only, what did you say? Customer's VAT registration is not important for us. You got it? Because we need suppliers as a business, you need to understand whether you are registered or not. Right. Did you try the 15th one? This is an easy question, right? That's you didn't get the answer. So what's the answer you got? Fourth one. Okay. You, Devinka? With luck? With luck you didn't get. Pawan 200. Second one. Why? What made you? So this Vaughan started on 1st of April and you are making a trading loss. So he's having a trading loss of 700,000. So this is what we did last week massively, right? And it had no any other income or gains for the accounting period and no qualifying, no QCDs are also there. So you are making a trading profit, your chargeable gain and total profit is this. Let's QCD is 15 and 503 is your total taxable profits, TTP. Assuming that, alright, okay. First tell me, this is a trading loss from an income perspective or company's perspective? Company's perspective. That's why you would have missed it. Because company rules and the rules for individuals are different. Right. So what is the loss brought forward? The loss brought forward for this period is 700,000. Okay. So when it comes to companies, you can relieve your total taxable profits. You can relieve from TTP.
When a business ends, right?
When a business, that is terminal loss relief. Yeah, this is not terminal loss relief. Okay, this is not terminal loss relief. So, I didn't get you. In a terminal loss relief, you can't carry forward. Now I'm talking in terms of individuals. Individuals you can't carry forward. Even here in a business also you can't carry forward because you are not going to continue the operations. So you can remove all the liabilities for that year and the previous years. What profits? Total, total. Company's top. Trading income. Terminal loss.
Against the
Total income. Not total profit, total income. Okay. There you don't get a profit now. Total income.
against
Capital losses. Capital losses only you're going to utilize it. You're confused.
and you have capital gains.
Mm-hmm.
So in case it's a capital loss,
Mm-hmm.
can you redeem that capital loss against the future year?
The normal one. Yes, future you can carry forward. You can carry back also. Carry back for preceding 3 years. Capital gains. Why you're taking the capital gains? There is no rule to carry back the gains.
So when you get for
Losses. Only losses you need to take. Why you are taking is you are taking this as a relief. So this year you are not in a position to, you are not making any income. So already you have paid more taxes, but this year you are being poor. It would be as a result of paying those taxes. That's why they are allowing you to use those losses as reliefs. In this case, now when it comes to companies, the most best tax efficient manner, write off the existing liability from this. So this will be how much? 197. It's an easy one. This is from company's point of view. Now what you need to do is, with this example, last week I gave you a note how the trading relief is utilized and how the terminal relief is not utilized. Cross check your understandings within both. Yeah, maximum restriction relief is how much? 50,000. 55,000 or 25% of total income. That you need to apply. That's why I told you first when you read the question, first identify whether it's individual or out of 15, how much you got correct. Five?
if there's two, nothing will be filled, right? Like filling the blanks.
Yeah.
Profits.
Fill in the blanks with CBE, you are unlucky. But third part will be, but you don't want to set up QCD because this QCD is already written off. Why you are setting it off, the QCD? In this, for individuals separate, loan interest. Yeah, before that only you need to take, because individual calculate the total income. On that you give it, or not on the QCD. But company is different on TTPs. Okay, fine. Now you all have confused individuals and companies. So before you do the questions tonight, highlight the loss, tax loss behind that. Because I can't. Okay, if you all did this question, so how much you got? At least 5. 1. No, 2.5. Then 2. You 2. Fine. Others. Now it won't be that hard in your exams, but if you are getting 2, your average with at question in exams will be 5. Yeah. At this level. Now at this I'm telling the honest feedback. Now see, 5 means you are getting 10 marks. So another 40 is more. Now see, 50% only you need to get. No? See how hard to get the 50%. That's why we are giving you world ranks. Think of the girl who got 96%.
From India.
Yeah, Mariam got 96%. Last attempt, December.
Yours.
She's mostly self and came to no. Yeah, she was there for PPM. She mostly like attended the revision sessions because her way of studying is different. Good.
It's not the best thing about once. We just look at the question and give the answers.
Happens. But they might be lacking in something else. But you are best at. What to do? Because one odd time there was a student, okay? So he, I mean, even I felt bit upset about it because he couldn't read and understand. He's good in English and things like that, but still he couldn't read and determine what they ask. It takes long time to understand, right? So next 16 to 20, every and Baylor. The following scenario relates to question number 16 to 20. Every and Baylor are married couple. They are married couple. So every disposed of various assets during the tax year 23-24. With these disposals resulting in chargeable gains 98,600. Chargeable gains is how much? 98,600. Qualifying for business asset disposal relief. What is that? BADR. Business assets disposal relief. And the other chargeable gains is 76,800. None of the gains in respect of the disposals of residential property, and every is an additional tax rate payer and has unused capital losses of 24,400 and brought forward from tax year 1920. Now tell me, this is an individual or a company? This is an individual. You got it? So let me now, what normally you need to do is first you go through the requirements. So on every, how many questions are there? All the 5 is not to every, no. Only the first 2 question goes to every. You got it? So I don't want to read all the information together and come back to answer everything. So what I normally used to do is I will say, okay, every in this part, 2 questions for him. Then the Baylor. That is 1, and this is also Baylor. Is also Baylor. So out of 5 questions, three parts to Baylor, 2 parts to every. So then it's easy for you to like segregate, because when you read the information of Baylors and every together, you are confused. That's where your confusion comes. Now every's part is over from here, isn't it? So then let's see what they have asked about every. What is every's capital gains tax liability for the tax year 23-24, assuming that this is calculated in the most favorable basis? So what you need to do? CGT. So to calculate the CGT, let's see. Okay. So every is having various disposable assets. With this disposal resulting a chargeable gains of how much? The chargeable gains is how much? 98,600. So, and qualifying for business asset disposal relief. So 98,600, which is qualifying for business asset disposal relief. And the other chargeable gains is 76,800. So the chargeable gains is how much? 76,800. Everything else is qualifying for the relief. If I were you, that is how I would have read. So that is qualifying for the disposal relief. But the other chargeable gains of 76,800 is not qualifying for the relief. So on this gains, I will get a 6,000 of what? AEA. What is this AEA? Annual exempt allowance or allowance, whatever.
give 10% on this asset disposal.
Mm-hmm.
That is a
Mm-hmm.
and 20%.
Mm-hmm.
Sorry, 10%.
10, not 76,800. For 98,600, you need to give 10% because it's qualifying for
This one.
BADR. What is other? That's what we are going to calculate. Okay. So for this 98,600, we'll say we need to calculate the taxable liability. No. So for this 76,800 is not qualifying for BADR. So, but they will be attracting what? AEA, annual exempt amount, not allowance. It's an amount, annual exempt amount. So after getting this, what is the value? What is the value we are getting? 70,800. Okay, 70,800. So then they are telling that every is an additional rate taxpayer and has unused capital losses of 24,400 brought forward from the tax year 2019 and 20. So they are asking us, what is the question? What is the most favorable basis? Okay. So in this instance, can I utilize this 24,400? I can utilize, this is brought forward losses of 24,400. I'm going to use against the assets which are not qualified for BADR. Why am I using that for BADR purposes? Because whatever the assets which is qualifying under business asset disposal relief, that is 98,600 will be charged at a lower percent, at 10%, where I need to pay only 9,860 as the tax liability. So if you want to be taxed at the most favorable basis, the assets which are not qualifying for that, I will be relieving the losses, because that losses will reduce my taxable gains. So at this point, my taxable gains is how much if you reduce this? In the 6,000. No, no, that's what I wanted to make you all understand this fact. Oh. Fine. Now you understood the fact. No? That is important. Okay, so when you simplify, what's the answer?
So if this law, if we take 10% of 90,600,
Mm-hmm.
which is the
Mm-hmm.
and other gains will take 10% of 76,800
Why other gains 10%?
because charge.
Other gains needs to be at 20% because he is an additional rate taxpayer.
Oh, that's how it is.
Because, okay.
And then
Mhm.
I got to deduct 6,000. Then 46 more.
46. No, that is not wrong. That is not wrong. But that is not the most favorable way, I'm saying. Most favorable way is where you are going to utilize the losses. How you are going to utilize the losses is the point. Now this 46,400, this gain needs to be taxed at what percent? This needs to be taxed at 20%. Okay. So that's how much you're getting? How much you're getting? 9,280. So if you total these two, how much you're getting? This plus this.
19.
That is your answer. 19,140. Did you understand that? What I did here is I took the 10% on business asset disposal relief because it is charged at 10%. No, everything else will be charged at 20%. So what I'm trying to do is I'm utilizing my losses there and the annual exempt amount there.
Where are you editing that?
You're asking me this one. Where am I adding? I'm not adding. This is the tax liability for this amount. And for this amount, I'm going to utilize this calculation. So this is the liability up to this point I need to pay, and this is the liability of the adjustment I need to pay. So the total CGT liability separately I'm taking. If you use AE on that, that is not going to give you the best, no, because rather than paying, now here you are paying the tax at 10%, no? So if I utilize the 6,000 there, still the lesser amount at 10%, then the higher amount, the 6,000 will be charged at 10%, 20%. You'll be paying extra. So 6 into 2 is 300. That's 240 pounds you will pay extra. You got it? So here the main thing is the most favorable basis. That's the most favorable basis and the ideal basis. Whatever the basis that you are doing is most expensive basis. That's why your answers are more, right? More than 19,140, isn't it? What is your, how much you are getting? Less than that.
9,860.
Mm-hmm.
Then I do 20% of 70,000.
Ah, okay.
Reduce the loss. And I got 0.
Ah, okay, I understood. So what she has done is, for the taxable answer, she has given the losses. Yeah, you after tax, no, taxes needs to be charged on the gains. No? So what you have done, I understood. From 76, you calculated the tax 20%. From 76, you calculate 20%, you reduce that 6,000. And then you gave the 24,400 also, and you told that it is nothing. And then it is 9, no. So the way is, this is what you should have done. Right, fun. Nice. It's not wrong. But the application, now you need to understand. Then, the next question. What is every base cost for investment property which was transferred from Baylor on 2023? So base cost, I need to read the investment property. So Baylor transferred the investment property to Every. On that date, it was valued at 340. So originally it was purchased for 156,000 pounds. So Baylor's mother died in 2018. Then the property was inherited by Baylor. On that date, the value is 213. So Baylor added a basement extension to the property during the March for a cost of 51,000. For a cost of 51,000. So now you need to estimate what is the cost. What needs to be the cost? Who can tell me what was the answer you got? Rashani? So it was 207. How much you got? So now the property value is 213. So, and you are making an extension of 51. That's a cost.
So I actually did that. And then I took 340 years. But if it's more than 6 years, how much value will
More than?
6 years?
Take down this point. I'll tell you another part. As Every and Baylor are married couple, the transfer of the property should be made on no loss or no gain basis no loss on basis. Therefore, the property should be transferred. The property should be transferred at the cost. Then continue. This property needs to be estimated at the market value. And add any extension value. So now Devika told me, sir, why we are not taking at the market value as of the date? Now this is a property which was transferred among whom? A couple. So technically you did not buy. So though the market value at today is 340, the value that needs to be charged on the property transfer date. You got it? So when was the property was transferred? 2018. He died and the property got transferred. On that date, what is the market value? That market value only you need to take. You got it? So on that day, the market value plus any extension that you are bearing will be the cost for you. Will be the cost for you. Right. So it needs to be the second one. What cost figure will have been used by Baylor when calculating the chargeable gain on disposal of ordinary shares on 18th August 2023? What do you get? Any other answers? Devinka, you didn't calculate that?
15,473.68. It's not even asking us.
Okay, fine. Cool. Let's read the shares. So when it comes to shares in Sara PLC on 18th August 2023, Baylor sold her entire shareholding of £1 in ordinary share of Sara PLC. Prior to the disposal, she had the following transactions in ordinary shares of Sara PLC. So the purchases of 38,000 and selling 6,000 and the balance another 8,000 is purchased, and they are giving the cost as well as the proceeds. Right. So technically, okay, they are giving more in Atlas Limited. So which company they are asking this? Sara PLC, right? They are not asking on Alice PLC. Okay. So these are the informations in terms of Sara PLC. Always when it comes to your section B part, he will break into sections only, he will ask you. Okay. So in this part, you need to understand how you are arriving at the answer. That's the first thing. So the question here is, they're asking us what cost will be used by Baylor in calculating the chargeable gain. So you need to determine what needs to be the cost. So in determining what needs to be the cost, you are selling 6,000 shares on 23rd. Okay. For this 6,000 shares, you need to understand what needs to be the cost, isn't it? So when you are matching, so how you will match? Same day. So do you have any same day? No. If not, next. Yeah. So is it 9 days? Does it falls within 9 days? So from 23rd to 1st, is it falls within 9 days? Yes. So then I need to take this cost. From this cost only I need to take. I mean from this value. So this is 8,000 shares at 24,800. This is for 8,000. But for 6,000, how much? For 6,000, how much?
So I did it, but I didn't take indexation cost because indexation is in
You can't take indexation here.
individual.
Yeah, in ordinary shares in Sara PLC. So how much you are getting in this part? I'll tell where you would have gone wrong, but you have missed that. So how much was this? Just first calculate me this figure. 24,800 divided by 8,000. This 24,000 is for 8,000. Then what is for 6,000? How much? 18,600. You did it in a different way. No, this is not the answer. It's not the answer. This won't be the answer. So technically, you had 24,800. So I'll tell you something. Normally we used to calculate this way. Divided by 8,000 and then multiplied by 6,000. So then your answer will be 18,600. So this is also will lead you to a problem. I'll tell you why. Okay. But how much you got? Your answer? 107. Okay. That's what I'm trying to arrive you at. So then you would have added these two. 98,000, the cost. So what is that 98,000? Both. You took 98,000 plus 24,800 and then you divided it by not before only, the rule is different. Okay, let me give the rule. Take down this note, it's important. No. Take down this rule. I'll give you a rule. Put it in this way. The sale of 6,000 shares, the sale of 6,000 shares should have been matched or should be matched, you say, should be matched with the shares purchased, which the shares purchased within 30 days of sale. Within how many days? Within 30 days of sales. Within brackets you can put, meaning that shares purchased on 1st of November 2016. Okay, in the next sentence you can tell, the amount to be included as cost, the amount to be included as cost will be Now I'll give you the amounts. 2000 divided by 8000. 2000 divided by 8000 into 24,800. That's how you need to take. Into 24,800. How much you are getting? How much you are getting? 6,200. Then write the next point. We need to add the above 6,200. We need to add the above 6,200 with the original purchase of shares. Is the original purchase of shares. We need to add the cost of the original purchase of share. Need to add the cost of the original purchase of the share. Purchased in April 2013. Purchased in April 2013. That is 98. Not 98, sorry. Yeah, 98,000. No? 98,000. So the total cost will be how much? Therefore, the total cost will be 6,200 plus 98,000 is how much? How much is that? For 200. So you got an answer on that? 102, 400, 104, 400. So
This will be the cost.
yeah, that needs to be the cost. So what's the answer we got? 104. We have a 2,000 worth of difference, no? 200. Okay. I don't know the way the options are on. Check whether if I have missed any information. First, we'll check if I had missed any information. Let me read. So 2,000 divided by 8,000 is 1/4 multiplied by 24,800, which is 6,200 pounds. Yeah, that is correct. This needs to be added with the original cost of purchase. What's the price of ordinary share pounds? It's £1, no? That needs to be the answer. 104,200 is not there. It could be their error. Okay. Oh, but the nearest one is 14400, no? Okay. So based on that information, that is the answer that we need to get. Yeah, options would be wrong. So that needs to be the one. Then, by what date an election have to be made in order to hold over bailers gain? Oh no, I have missed another question. Yeah, put it to first one or 104,200. Okay. First one or fifth one, I will give you as a mark. Okay. We have chosen the first one or the not fifth one, sorry, fourth one. Close enough. 600 and 400. There could be any. They would have missed a figure. Okay, in the question. But it's okay. But we got the answer. That needs to be 104,200. That's a method to do it. Now, how much gain arising from Baylor's sale of the ordinary shares in Alice to her son? Now, this is for son can be held over by a gift holdover relief claim. So, in a gift holdover relief claim, let's see. On 11th of November 2023, Baylor sold her entire holding of £1 ordinary shares in Alice Limited, an unquoted trading company. It's an unquoted trading company to her son of £180,000. The market value of the shares on that date is £220,000. The share had been purchased on 1st of August 2009 for £55,000. Baylor's son sold the entire holding at 210. An election will be made to hold over as much as possible to gain a gift of a business asset. Of course, he's getting a business asset gift as a gift from his mother. Okay. So what was your answer? Third one, which is 125,000. You got the first one. How did you get the first one?
Or I took the difference between
Mm-hmm.
180,000
Mm-hmm.
and 220,000.
Difference between 180 and 220. 180 and 220. Forget about the 200. That is the selling price. So what we are trying to get is how much of the gains arising on the sales of ordinary shares can be held over by gift holder relief claim. So you are getting 125,000, one person is getting 165,000, the other person is getting 40,000. Anyone didn't get 30,000? I'll get 30,000. Okay, fine. So what you need to do, let's understand this point also. Take some points on this. The sales needs to be deemed at. The sales needs to be deemed at the market value. The sales needs to be deemed at the market value, which is 220,000. So then in the next point you can say the cost of the shares, is 55,000. Cost of the shares is 55,000. Therefore, the next point you can say, therefore, the gain before gift hold 55,000. That is given. I'm taking this figure and this figure. I'm just taking the figures there. I'm just explaining how am I going to arrive at the answer. Okay, I'm giving step by step. So first thing I told about the 220. Then next I told you the cost. So the gains before gift holdover relief is how much? 220 minus 55 is 165,000 pounds. Okay. Now you need to do a test. Take down this point. Calculate the amount which qualifies for gift hold over relief. I'm giving the method so that if you get a question, you can understand what I'm doing there. Okay, right. So where you can say 180,000 minus 55,000 is how much? 180,000 minus 55,000 is 125,000. This amount will be chargeable and restrict any excess of the proceeds and restricts any excess of the proceeds. Okay, last point. Therefore the gain of 165,000 will be reduced by 125,000. Now you know what is that 125,000. What is that 125,000? Gift holder. Reduced by 125,000. Is how much? 40,000. See answer. That's the gift holder. But that is the claim. Here, how much of the gains rising by on now the way you took, I don't know. You are lucky. That's why I asked you how did you take it? 40,000. You are lucky to take it. Can happen. No, I'm not. That's why I gave you the point, steps. So, but Roshani, what you happened is you was able to calculate that 125. I was happy. 125 should be the amount of the gain that you was the claim. But the question is how much of the gains arising as a result of a sale of ordinary shares in Alice to her son can be held over by making a gift hold over relief claim. So anything excess that you pay, I told you this in the class as well. So you can restrict from your relief only to the original cost. You got it? Not beyond that. Any excess that you get, you need to pay no. Because your mama is giving you a gift. So if it is for the same thing, then it's fine. If the market value is still the same, then fine. But anything over you get means that's an additional thing, right? So 165 is the difference between the market value and the cost. At today, the market value of the shares was 220,000. But the shares had been purchased on 1st of August was 55,000. Difference between two is your cost. I mean the proceeds, sorry, proceeds. 220 plus 55 is your total gain. So 220 is your total proceeds, 55,000 is your total cost. So the difference is your total gains. That is the total gain you are getting. However, your gift hold over relief is 125. The difference between those two is what will be held over by making a hold, as a relief to claim from a gift holder. I think you have misunderstood the requirement. Right. So the next one, as a result of this, by when she needs to pay? By, okay, take a point. The transferor, answer for the 20th one. The transferor within brackets, who is the transferor? Bailor. Bailor is the transferor in this case. And the transferee, the transferor and the transferee can jointly claim 20th one. Answer for the 20th. The transferor and the transferee can jointly claim within 4 years of the end of the tax year of the transfer, the end of the tax year of the transfer. So which means it will be 2028, tax year is 5th of April. Then who is the claimant? Bailor and Hazzan. It will be the third one. Got that correct. Very close. Done.
So this is
There are two task questions, no? So mostly the second task questions very likely to be on that. Yes, you go ahead. What did you say? Hmm. 21st one I didn't explain you. See.
yeah. Oh,
Three task questions. Yeah. No, if you read it properly, task questions are easier than section A questions. Okay. So now let's go to 21st. They're asking what is the amount of output VAT. Output means sales or purchases. Sales should be charged on the sales on 1 and 2 of for the quarter 31st December 2023. Then they are asking the input VAT on the expenses, which is the third one. It's easy. What is the amount of VAT? Then they are asking on the customer in another country. Then which two of the following statements, 24th one, and which two of the following statements is the 25th one. Okay, fine. Let's go to read the question. So I hope you would have read the question on the first one and the second one. So the first one, the output VAT of 36,500. So you have 36,500 of output VAT. Has been charged on the respect sales. Okay. The figures includes an output VAT of 700, where an invoice was issued on 2nd of January 2024. So this is the invoice is issued on 2nd of January 2024, but this information is given on 31st December 2023. So for which period you are calculating? Technically you are calculating for 31st December 2023. So can I include this invoice into this 36,500? Because this is happening in January, but I am calculating for 31st December. Technically you can't, you need to remove it. Okay. So the output VAT on the first sale, yes. Tax, no, quarter, no? 29.
See, even though this will be the
You need to take the invoice date, not the earliest. No, no, no. You need to take the date of invoice. You need to take the tax point needs to be the sorry date of supply. Um, Date of supply is 29 December, and okay, make this note on that. The tax point for the goods supplied. The tax point for the goods supplied on 29th December 2023 on 29 2023 is 2nd January 2024. Within brackets you can say invoice within 14 days. Invoice within 14 days. Therefore, the VAT on this invoice is not due on December quarter. You got it? Now I'm saying that you need to decide the tax point based on the issue date, not the invoice issue date only you need to take, not the goods.
you take the earliest date of either one of them.
No, not the earliest, not in this sales out. No, you need to take the invoice. Okay. So then at this point it will be how much? 35,800. 35,800. No? You deduct 700. Then they are telling that, and then output of 500 pounds, where the invoice issue date is 24th December 2023, was supplied on 5th of April 2024. So, should I take that? Because it is 24th December 2023. Okay. So, how much I need to take from?
But it says this figure includes output, right? So we don't do anything with that, right?
That's what I want to say. Now, this includes output VAT of, so on December, the output VAT is 500 pounds. The figure which includes the output VAT of 700 was issued on this much, and output of 500 where an issue was goods on supplied at 460. Sorry, not 460, sorry, 500. So this needs to be inclusive of VAT, isn't it? That is inclusive of VAT. So I can't take the figures to the sales inclusive of VAT. That needs to be exclusive. So this 500 is 120%. What is 100% on this? 20% is the VAT. No?
But then saying that this 500 is already included in the 6,500, right?
36,000.
Because it's output of 6,500 charged in respect of sales. This figure.
Yeah, that's what we are removing the figures, okay, which are not applicable for us. And we are taking the figures which are relevant to us.
Yeah, so don't we use 500 only because that's output part of 500.
That is not 500. We are not removing the entire 500. The sales amount is 500. It's the invoice amount. 500 pound is the invoice amount. not the VAT amount. You got it? Sales output. On the sales, so now on this 500, you divide 120, then if you multiply it by 100, how much you get? You get 416. That is 20%. Okay. Sorry, that is 100%. So on 100% you take, because it's 500 which will be including a sales VAT of 20%. So okay, now see, let me read the scenario for you. So D is a manufacturing company which owns 78% of another manufacturing company. So C, both companies have been registered for value added taxes for many years. The companies do not currently have a group registration. So they don't have a group registration. That is also an impact point you need to take. Both only make standard rate sales of supplies. Now they are telling that following information is available in respect of VAT for the quarter ended. So which means now they are telling that the output VAT of 36,500 has been charged in respect of the sales. That's clear. Okay, I understand that. That is what this 36,500 is about. So then they're telling that the figure includes an output VAT of 700 pounds, where the invoice was issued on 2nd of January 2024 for the goods supplied on 29th December 2023 is 700 pounds. So this 700 pounds is not applicable to us anyway. Okay, fine. Why it is not applicable? Because it is not falling to the December quarter taxable dates. However, an output of 500 pounds where an invoice was issued on 24th December 2023, that has been supplied on 5th of January 2024. So this has been happening on 24th December. This is being issued on 24th December. So where this needs to be included. So if you take 500, for an example, let's assume if you take 500, what needs to be a total? The total output.
Sorry.
No, I'm forget about the 100, 400. I'm not taking this figure. Forget about what I'm saying here. So I'm just bringing with your understanding. If you total these two, how much is the total? 35,500. 36,300. Okay.
Yeah, I'm saying that this 36,500 already includes 500. So if we take 36,500 minus 700, which is 35,800, right?
That needs to be your answer.
Yeah.
So you got that answer. So that's one thing. Let's assume if you come across that 35,300, how much? 800. So you're not getting that. So then from this 35,500, if you reduce 500, some will mark 35,300. Do you mark 35,300? Did you mark 35,300? And the guys who are calculating this, okay, the guys who are calculating this will be 416. So 35,800 minus 416, sorry, add 416, that's how much? Sorry, minus 416.
This 416 is only 20% included.
Yeah, only 20% include.
Inclusive of
They're asking what is the amount of output VAT needs to be shown as a result of first one and second one. This 500 you should not take at all. Not 20% of this thing. This, as Devinkas told me, this 500 is already included in this 36,500. You don't want to take any pro rate. You don't want to take any 500. You take, your answers are wrong. Because what you need to understand is they are telling that this is already including this 36,500 is already including of that this 700. Okay, I understood it is not relevant, so I'm removing that 700. This 500 needs to be included, so no worries, it needs to be there. So that is correct, whatever they have done. Cool. So first transaction adjustment is done. Now the second one. So I 500, I didn't do anything. That's correct. Because I wanted to show the options what you all are getting here. Because you got different answer, she got different answer. No, wait. We need to. So then they are telling that in addition to the above, D company also charged an output VAT of 460 on the sales. That needs to be added. No? So they have charged an output VAT of 460. So now, how much is that? 35,700 minus 700, 36,500 minus 700 minus 460 is your answer. 36,260. Now see, you got an answer. Now you'll have an answer. How did you get second one? This way. So you didn't take that 500. Okay, good. Those who took 500, your answers are wrong. Because some took this 500 and prorated the final exam. That is already included, so don't include. Devinka understood that part. That's correct. Because you understood that you should not include that 500 because it's already there. What the examiner tested there is, should you include this or not? And he has given 2 dates. So one was issued on 2nd of January. That we are not taking to December. The other one was issued on 24th of December. That you need to take. So both of these figures actually have been taken inside this 36,500. So this 700 should be come out. So I took it out. 500 needs to be still retained inside. So I'm not going to do any adjustment. No adjustments for that. The next 460 you need to add. Because they are asking the sales on 1 and 2. Yeah, what you said is correct. But you told me a different answer.
No, I didn't take the second one.
Okay. Okay, fine. That's why I got lost. Why did you take that? Fine. What is the amount of input VAT recoverable in terms of the option 3? So what's the answer you got now? Roshani? No answer. We see that. Second one. Okay. Third one. Let's see. You need to look into the third one. So, entertaining UK customers. Do you need to take? No. 0. Yeah.
So we get, we have to reduce the 460. Previous question.
You need to add
460.
Add 460. Because that is a tax charge, no?
But there are subsidiaries.
There is no subsidiaries. Yes, no subsidiaries. That's why you're adding it. There's no group relationship. They're telling that, see? So do not currently have a group registration. Since they don't have a group registration, then you need to add it up. You need to be taking as an external person. If you are considering it as a group, then the group will take it up. Who will take it up? The D. Yeah, D archery. But this is an individual thing. Fine. So then the third one, entertaining UK customers. Are you going to pay input taxes? No. Overseas? Yes. Redecorating a room, managing by director's house? No. Building a wall around the park? That you need to take. So you need to take this and this. So which means not 800. 3,000 in 2,630. Third one.
Your customers and redecorate.
No, no. UK customers overseas. You take overseas. What is the amount of input recoverable on the expenses? The recoverable expenses you can recover the in UK overseas customers, and whatever the amount that you have addition spent on the decorating part. The third one, the building a wall around the Diggory's park limited car park. Other two is excluded in the list. You can't claim. There's a list, big list, right? So you need to look for that list. Entertaining for UK customers and director's house is not related. Okay. Then, what is the amount of VAT that Diggory Limited will charge on the sale of the goods customer in another country? So, customer in another country, what is the amount you need to charge? That's easy. Zero. You got it, zero? That's the answer. Because export goods, you charge zero. So this is, they're talking about export, right? Say you are selling to another customer in another country means you are exporting. So export goods, do you charge VAT? No. Then, which two of the following statements about D Limited's acquisition of the part of the business of John as a transfer of a going concern are correct? So, in terms of the going concern, Diggory will automatically be liable for any outstanding VAT penalties incurred by the John in respect of the part of the business acquired. So let me explain that. Take a point there. So you can say Diggory is not taking over the registration. He's not taking over the registration of John. Therefore, he's not liable. Diggory is not taking over the registration of John, so therefore he is not liable. And John will not have to re-register for what? So first one can't be the answer. So the acquisition of the part of the business of John is outside the scope of VAT. Yes, it is outside the scope of VAT. Because I've already explained you, he's not taking part of his penalties. So it is outside the scope of VAT. Anyways, acquisition a business. Chance of going concern means whether it's can be continued or not, which means it will be discontinued, insolvent after acquisition. So if the VAT chargeable on acquisition is less than £1,000, it needed to be paid. So what is that? Take down the rule of VAT chargeable. The rule of VAT chargeable of £1,000. The rule of VAT chargeable. Sorry, the rule of VAT chargeable less than £1,000. Mention that word. That is important. The rule of chargeable less than £1,000 need not to be paid. Need not to be paid on deregistration. On deregistration. So here the John will not need to register again for VAT. So here he does not need to register again for VAT. That I hope you would have read this entire story, right? So I'm not reading it. So I'm just explaining you the answer. So it will be option 1, sorry, 4 and option 2. Option 2 and 4 needs to be answered. Then which two of the following statements about degree group, possible VAT group for registrations are correct? So now the VAT registration group of companies. So the degree group must appoint one of the group companies to be a representative member, which is solely liable for paying the group VAT liability. Downs Limited should not be included in the group registration because it's a large making zero rated supplies. So this is a theoretical point. Then supplies of services of D to C will be disregarded for VAT purposes if both within the group are registered. So in a group, only one needs to be registered, isn't it? So if both are registered, then it is not allowed. That is correct. Each companies of D will have to make separate returns. No, they don't want to make separate returns. They need to make only one return. So they need to make only one return. So that is wrong. Okay, it needs to be the second and the third. Fine. So the next part of Christopher, I'll send you the drafted answers to you all. So go through that. I'll draft the explanations to you all out. Christopher, can we join tomorrow? Can you all come around 4 o'clock? 4 to 6? So we'll continue from Christopher. So what I try to do is, now the answers you haven't answered. Now for an example, now this question is from which one? Chargeable gains, IST transfer, no. CGT is there. So then go through that part and try to answer this with that knowledge. And we'll do both C and section C, and this part I'll do it tomorrow. So why A is wrong? As per why A is wrong, because in this instance, I didn't get you. What do you say? Tomorrow's one? Tomorrow I'll be fasting. Okay. So 6:15 I need to break the, after breaking the fast. Okay, I might need around 1 hour. Then I'll finish. 1:30 I'm having the other tax batch, so I'm finishing that by, can you all come around 3:30? Yeah, 3:30, no, come around 3:30. So I want to I'll finish that class by 3:30. Okay, so then I'll start with you all 3:30. We'll try to finish by 6, and Monday also we'll have a session. Monday, can you all? So Monday we'll join the same 3:30 time. Okay, so because from 3:30, yeah, because tomorrow I need to travel to Canada the same time. I thought to travel by the prayers around 7, so I reach Candy by 10, 11. So that the next day early morning I have classes at 6. So what I thought was to give you all more time on Friday also around 3:30 will start. So tomorrow also 3:30, Monday also 3:30, not Friday. Tuesday is your exams. We'll do this part. We'll do the balance of this part, and did I answer your question number 268? I didn't answer. No? I'll give you a response in a while. I didn't read the question. And Roshani, send your questions again. Did you send it again? No? Send it again, because that disappearing messages has disappeared all your doubts. So just send it to me. You wanted to know the superannuation partner. So send it to me. Fine. So we'll do that. That is, yeah, that's a separate area. So I'll tell it to everyone. So tomorrow we'll finish this paper, and we can finish it within that time. So today we spent most of the time in our section A, because section A certain calculations is little tricky. So the ideal way to go is section C, B, A, because these things you have answers to at least. You can pick and choose. So first you answer there, give your maximum attempt, and then come back and gain your marks. Okay, fine. So time your papers, time your parts. That's important. Okay, I'll stop there then, and we can start from the other part.